Good morning, everybody. Happy Friday. We're still a minute early, so if you're not here yet, don't worry about it. Good morning, Mike. How are you? Good morning, Luciano. Guys, hope everyone's doing great today. It's Friday. We made it, right? Made it through the week. Everybody's excited. We're going to hang out. We're going to learn some stuff today. Going to post a lot of pictures, ask a lot of questions. Talking to you guys. Hey, good morning, Tam. Welcome to the room. Nice to have you with us. Carlos, good to see you back. Kiana, you are so quiet, but you've got the best avatar in here, right? I assume you are about 2 inches tall with dark hair. Guys, I hope everybody's doing well today. Hope you're as excited as I am to be here. I don't know if you've recognized this yet. Anybody that's been in this class for a while, we do the same thing every day. Every day. My sole purpose in life is to give you a foundation to grow from. Hey, good morning, Samuel. If your travels are for fun and not work, you should be out having a good time. Don't make me kick you out of the class so you can go ride roller coasters or something. I'm going to let people shuffle in a little bit, guys. While they do that, let's go ahead and go through the morning routine, right? Let's go to forexfactory.com and see what's going on in the wonderful world of news. 8:30 a.m., guys, there was a lot of news. And one of the reasons that we're looking for news each and every day, it isn't because we're worried about what the average hourly earnings are, and we're not worried about the non-farm employment change. What we're curious about is when that market may bounce, may spike, may do all those things that we don't want it to do. And I took a picture today just to show an example, hopefully. And then I think I deleted it. I took a picture right after news printed, and this was it right here. So we'll bring this up. Notice the timestamps. 8:30 to 8:31, guys. This market absolutely rocketed, and it looks like it went 75 points on the NASDAQ in a matter of seconds. So this is the kind of reaction that can happen if news is released. People may react to it. So each and every morning we're going to make sure that we're not jumping in front of that freight train of emotion. We're looking for high impacts. If you're a natural gas trader, 10:30 a.m., storage comes out. Probably won't affect many markets beyond natural gas. So if you're not a natural gas trader, not really looking for that one. But that's every morning, guys. That's part of my routine. I wake up, my charts begin to load, and I go right into the mode of making sure that I'm not trading in the news. And it makes a big difference. Good morning, Jose. Everything that I talk about comes from the education page, guys. Nexgen Software Services. Right here, we have the tutorial section. Every rule that I discuss, you'll be able to find it here. Everything that you need for a NinjaTrader is going to come right here from the software user guide. This is opening, closing, building charts, muting the room, screen capture programs. And guys, this is the most important one. I know that there's still some of you here that are brand new, that are on demos, and you're thinking to yourself, I am going to get super smart and figure this out and make a bajillion dollars by sitting on the sidelines. Mark is that good, and just listening to him is going to set me free. Guys, we need to have a conversation each and every day. We need to have feedback each and every day. And this capture software, it was downloaded onto your computer. TechSmith Capture. Type it in your search bar right now. Open it up with me if you've never used it. We're going to go through a little how-to, because you and I are going to have a conversation throughout the day, Monday through Friday, from 9 a.m. to 12 Eastern. I'm here, I'm available, and my sole purpose in life is to help you get to where you want to be. And this capture software is going to allow you to do that. It's a click and drag program. It's super easy. I'm going to hit capture on this giant red button, and I'm going to click and drag from the left to the right, top to the bottom. And when I release, it's going to ask me, do I want to capture that image? Well, absolutely I do, because this is how you and I have a conversation. This capture image preview comes up, and now your job is going to be to use these arrows, to use these shapes that are available at the top, but most importantly to use the call out button. And take the time to tell me why you're doing what you're doing. Tell me what you see. Tell me how it made you feel. Tell me why you did what you did. And then you're going to be able to take this picture, guys, and just click the little copy button down here in the bottom right. It's going to put it on your clipboard, and if you swing over to the chat box, you could drop a picture right in there. The first hour is dedicated to rules. The second hour, I'm going to start looking at your charts. We're going to work the live market in every opportunity we get. But this class is building a foundation. This class is starting at the very beginning, working your way in, not overthinking things, allowing it to be simple. And then you're going to grow from there. And that's the hope. The next thing you're going to do with these pictures after you take them is you can upload them to Screencast. And Screencast is going to put, you'll have much more fun with financial independence. I think we all have much more fun with financial independence, Samuel. That's a great goal to have, right? Once you upload to Screencast, it's going to give you the Screencast address. And guys, now your picture's in the cloud. Now you can share it once again. If I copy that link, I get that www.app.screencast. I can post that in the room. And this is going to be another great way for us to have a conversation. I can also take that link that was just provided, and I can go to the spreadsheet that Nexgen gave you. And this is your tracking sheet. And I'm not sure what I just did there. Here's your tracking sheet. And you can post that link right into the tracking sheet. And this is going to help you come back, and this is going to become a study tool. And I'm going to talk to you about how that happens in just a few minutes. I'm not even sure which one I clicked on, but that's a good looking trade, isn't it? Wow. So guys, what we're going to do is we're going to keep it simple today. I want you to be able to post pictures. If you've never posted a picture in my room, do me a favor, post one. Kiana, let me see a picture. It doesn't even have to be of a trade. It doesn't have to be of a rule. It doesn't even have to be of a chart. Good morning, Debbie. Show me that you can do it. Carlos, give me one. Brian, I'd love to see it. Tam, give it a practice, right? Jump in, guys. Be a part of this classroom. The more you participate, the quicker you're going to get to where you want to be. And we're going to talk about how to get to where you want to be, guys. And it's a very easy path. It's a step-by-step process to getting you to being a comfortable trader ASAP, a confident trader ASAP. And you'll notice that it starts with posting your trades in class. I really can't stress this enough. The more you post, the quicker you get to where you want to be. The more pictures you take, the quicker you're going to get to where you want to be. And then use that spreadsheet that we provide. Your spreadsheet's nothing more than a trading journal. So every time you take a picture, every time you post it in class, every time you simulate a trade, you're going to put it into your spreadsheet. This is just a tracking tool for you. But the spreadsheet becomes the most effective when you go back in the morning. I set aside 5 minutes every morning. That's all it takes to look at what I did yesterday. What worked for me? What didn't work for me? Because I don't care where you are in your trading life, you're going to have things that don't work, and you're going to begin to recognize patterns. And the more you study what you did, the easier it is to get to where you want to be. What felt easy and what kept you relaxed? What you'll find is that the right trades are the easy trades. The right trades are the calming trades. And the ones that feel forced, the ones that make you nervous, are typically when you're going into a trade knowingly breaking your rules. In this brief historical study each and every morning, it's going to prepare you for the day. It's going to set your mind right. This is what worked. These are the patterns that were successful. This is what I'm going to focus on. And it's definitely going to accelerate your learning. We're going to talk about one trade today. We're going to talk about a high probability trend trade. The first hour of class, first hour and 20 minutes, is dedicated to learning the trigger lines, the Fibonacci rules for when it's okay to trade. We're going to lay down a foundation, guys. We're going to start at step one and work our way from there. Don't be in a hurry to get to the finish line. Focus heavily on the foundation that's going to give you that solid platform, that's going to give you something to grow from. I'm going to cover these rules. Hey, Bobby T, good morning. I'm going to talk about the looks. I'm going to talk about the advantages that they provide, and I'm going to show you how to study these looks. You're going to simulate your trades daily. You're going to go in there and you're going to practice these looks. And you are on simulator, so I want you to break everything. I want you to go screaming past your limits sideways so you know where those limits are, right? It's simulator. Don't be afraid. But I want you practicing the correct rules, the correct trades. Don't get in there and try to just become a simulator millionaire. We're going to simplify today. Our first focus is on what we call a high probability trend trade. And I'm going to go from the education page right to the tutorial section. And from this tutorial section at the very bottom, if you scroll down, is going to be the glossary of common terms, the things that you're going to hear in class here. And we're going to talk about, for the first hour, guys, I'm going to say the same thing as many ways as I know how. We're going to talk about a high probability trend trade. We're going to talk about a trade that typically wins 70 to 80%. Brian Morris, awesome. Now I know you can do it. Now I want to hear from you all the time, Brian. Great job. Remember, this is your class, right? So everything you see, everything you wonder, post it in the room. We'll talk about it. Great job. Thank you for that. Guys, this high probability trend trade is when each indicator on every chart agrees for the trade. Your triggers will be the strongest. There'll be nothing in the way between you and your target, and you won't reach any areas where the market is likely to stop. This high probability trend trade happens throughout the day. It happens on every market. It even happens on every time frame. But what it's going to do for you is it's going to teach you how to read your charts, and that's the goal. Your first 30 days with Nexgen is designed to make you a chart reader, to have you open up your workspaces, to look at them and to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. You're going to use these likely to continue areas for entries for that highest probability trend trade. You're going to use these likely to go areas, great for targets, using Fibonacci as a target point as you work on management. And you're also going to understand where the market is likely to stop, guys. And this is one of the most important concepts that we talk about. Not only are these areas where the market is likely to stop, it's a trend ender. It has the potential to reverse the market. It's going to let you know when to not take that next trade. But what it's also going to do is that termination condition is going to act as an anchor. When a termination condition creates a reversal in the market, and then this high probability trend trade that we talk about, that we're about to study the rules on, happens, this is your best of the best. This is your highest probability. This is that trade that typically wins 70 to 80% of the time. And my goal for each and every one of you is we're going to create confidence through the memory of success. We're going to create confidence through taking a trade that wins more than it loses, that gives you a statistical advantage. So that's going to be our focus initially, guys. And first hour, we're going to do that. We're going to simplify. We're going to talk about a high probability trend trade and build that foundation. And from that foundation, I'm going to introduce the second trade that you'll put into your plan. And it's what we call a medium probability trade. And this is going to be a trade where most of your indicators line up for the trade. However, a small issue exists. A small singular issue exists. Your ability to read your charts is going to have you identifying this issue. And this is probably going to be the vast majority of your trades. The high probability trend trades are the never miss it trades. The medium probability trades are let me use a little chart reading and make sure that this is what I should be doing. These trades, you're going to take them, you're going to manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. If there's trouble in your way, your chart reading will identify it, and you'll be able to get to a zero loss. You'll be able to take quick profits on these trades. Your focus on the high probability will open the door for the medium probability, and that's why it says simplify 2 trades in your plan. We're going to have 2 trades. I'm going to give you a written plan to focus on as a brand new user, but the key is you got to learn these looks so that they become easy. You've got to get very comfortable with what it looks like when the rules are met, and that's where the second page of that spreadsheet comes into place, guys. The second page on the spreadsheet is nothing but your favorite looks. If I click on that tab, there's an entire section dedicated to my personal trade setups, that high probability trend trade setup. And every time I take it and the rules are met, I'm going to drop it into this spreadsheet. If you're brand new with me, guys, the one that Nexgen provided you has about 65 high probability trend trades, and it also has entries for that medium probability trade. The entry points, the entry rules are virtually the same. This one that I just dropped in the room, we are up to about 248, 249 high probability trend trades, 50-50, those medium probability trend trades. But guys, you can take your weekend, you can do some study, you can click on these pictures and begin to learn that look, begin to burn that image into your mind so that it becomes easy, right? Repetition, recognition. And then after class the next day, and certainly on the weekends, guys, you can use that market replay. You can go back and replay the day. You can fix your mistakes. You can take the trades that you should have skipped. Take the trades that you missed. And you can miss the trades that you shouldn't have taken, right? You can go back and you can really see the power, really see the potential of what this software can do for you in your trading when you go back and you have the ability to hit pause, to check your rules, to make sure that you're following them. And you're going to take pictures of everything that you do on Market Replay too. You're going to make sure that you have so many pictures taken. It almost becomes to the point to where you feel obligated to take pictures. I tell people, take 15 pictures a day. It's going to seem like a low number by the time you get to the second week. You're going to find yourself taking pictures before a trade. Right when you enter a trade, you're going to take pictures during a trade to work on your management. You're going to be able to take pictures after a trade to see what happened, see if anything changed. You'll take pictures when your rules are met, and you'll also take pictures when your rules aren't met. You're going to make sure that you know what it looks like. But 15 pictures a day, guys, that translates to about 300 pictures in that first 30 days. And 300 pictures in your first 30 days is going to create an awesome foundation, and your recognition level is going to go through the roof. And then we're just going to rinse and repeat every day. We're going to study rules. Every day we're going to talk about advantages. Every day you're going to post in the room and we're going to have conversations. And that's the goal. I love that I'm already seeing so many people posting in this room. That means the market's moving, right? Rules are being met. So let's focus on the high probability trend trade. And I am going to put the rules for it right here in the room for you. There's only 3 rules for a high probability trend trade. Each of these rules provides an advantage. The advantages are labeled out in yellow here. And you'll notice that it says a trade equals momentum plus a clear path plus an entry area. Only 3 things have to happen to get you into a high probability trend trade. Your large chart needs strong triggers, your large chart needs no terminations, and then we're going to refine on an entry chart. So 3 rules are going to happen on only 2 charts. Simplicity, remember, there's no reason to add another chart, a 3rd chart, a 4th chart. There's no reason to increase indicators or to complicate the process, guys. 3 simple rules providing 3 advantages that happen on 2 charts. Your large chart is going to define direction. It's going to define momentum. It's going to define your areas. It's a broad stroke of a brush. This large chart is going to give you the general consensus of what the large crowds, the deep pockets investors think about what's going on. It's the overall opinion of the market. Your first 2 rules, the advantage of momentum and the advantage of a clear path, must happen on these large charts. This is the chart that sets the tone. When your first 2 rules are met, that's when you turn your attention to a smaller chart. This is just a refinement tool. What happens in 1 bar on a large chart, 1 bar providing you the information about direction, momentum, and areas, you're going to refine it into 15 to 30 bars on this smaller, faster chart. And the smaller chart's just an entry chart. And rule number 3 is going to be your entry rules. But when you follow this refinement process and you're taking entries on the smaller chart based on the information provided on the larger chart, it's going to allow you to reduce risk. It's going to allow you to increase your profit potential. And this is what we're going to talk about, guys, for the next 45 minutes or so. We're going to talk about these 3 advantages, and we're going to look at them from the education material. And then we're going to go back and I'm going to show you how to study and what we're looking for. I'm going to provide you checklists and a written plan. I'm going to give you everything that you could possibly hope for to be successful with the software. The only thing is I need you to participate. So don't be shy today, guys. We're going to start with the T3 trigger lines. They're going to give us an awful lot of information. And the first thing that they're going to do is they're going to help us determine the overall trend of the market. When my small trigger lines, which are these solid trigger lines, break above the large trigger lines, it's going to paint your background green. When my small trigger lines break below the large trigger lines, it's going to paint my background red. And guys, this is the easiest thing you're ever going to have to learn. A green background means that we're in an uptrend. It means that you're only looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Guys, trading with the trend is the first advantage that you give yourself. It's a pretty easy concept. All you have to do is look at the color. And if you are colorblind, and I know that there's some of you out there, that's okay. If you are, look at the position of the small triggers above the large triggers. The only way Rule 1 can ever be met is if the smalls are above the large and the large are wide. That's that advantage of momentum, guys. And the smalls break above, giving you that trend. Rule number 1 says strong triggers. Strong triggers is easy to identify. Small triggers are crossed up above the large triggers that are also crossed up. And it's the space that's created between the two. It is the smalls separated from the large, like scissors that are open, prepared to cut. As this is your best of the best look. And when you have this look, the odds are favorable for the market to continue in the direction of the trend. And you're going to hear in the room all the time, odds favorable momentum. OFM is how you're going to see it annotated on charts. When you have odds favorable momentum, this is the most favorable look for buying a pullback to Fibonacci support on that smaller, faster chart. That refinement chart, what looks like 10 to 15, 20 bars, is going to look like a tail on your large chart. And we're going to learn how to use this look for study. But on this one bar with odds favorable momentum, this black tail represents a pullback to an area typically on a smaller, faster chart. You'll see it in a downtrend when the smalls are below the large are wide, they're angled in the direction of the trend once again. It's that space created, that open scissors ready to cut. That's when the odds are favorable for the market to continue in the direction of the trend. If you commit to momentum on everything that you do, it's going to cover some mistakes. It's going to help alleviate problems because this is a freight train of momentum in the market and it's difficult to slow. But when those small triggers return to the large triggers, when they weaken the large triggers, anything can happen up or down, guys. And these weak trigger lines, be happy to. And remember, Safia, all of this is in the materials, but I got you all day long. And this is straight from the user manual. Whoa, what did I do? Sorry. So there's your look for triggers, right? These are your advantages. No worries. And then I've even got a better one. You know I like to share, guys, and I take pictures all the time to help you guys out. Here's rule number 1. Odds favorable momentum, OFM. There it is. There's a tail, that potential pullback, and the market continues up. You'll notice that the smalls begin to weaken the large. We get those anything can happen triggers, and that kind of precedes a reversal. Same thing down here. Market comes in, the triggers weaken, and there's that reversal. So you're going to wait for that odds favorable, that small below the large, and we're going to look for those tails. We're going to look for the opportunity to enter with that momentum. And I like this picture, and I share this one as my rule number 1 picture, because there will be times in the market when the smalls and the large don't agree. Maybe the smalls are up and the large are down, vice versa. Sometimes your trend is down, but your small triggers are red and angled to the downside. Your large triggers are down and angled to the downside. This is not an odds favorable look. This is where new users and really where experienced traders get run over. This is that consolidation point. This is that range bound. This is really the guys that move the market fighting. You're watching buyers and sellers duke it out, reigning for supremacy. We don't have to get caught in the middle of that thanks to waiting for rule number 1. We don't have to predict. All we have to do is sit on our hands, take a sip of coffee, and wait for that odds favorable momentum to be present. So guys, rule number 1, pretty simple to recognize. Space between the two, strong triggers, advantage of momentum. And then I put the question, I built a lot of these pictures. If you only traded with strong triggers, and this is for you guys that have been simming for a little bit, would it keep you out of a lot of maybe trades? Would it keep you out of a lot of losers? The answer is typically yes. Having momentum creates an advantage. And guys, it happens all the time. This is the S&P. I'm going to take everything off. I'm going to go to my templates, and I'm going to load a new template, guys. And you have this one on yours as well. 2 triggers only. If I click OK, all I'm doing is seeing where do I have odds favorable momentum. Small's below the large are wide. They're angled in the direction of the trend. I can circle one of those tails during that momentum phase. And we'll come back when we talk about entries to see if it created an opportunity. We're going to do the same thing here. Small's above the large are wide, and we're going to circle a tail. Guys, this is how you're going to learn to study and build a little bit of trust in these rules. Is everybody with me so far? Smalls break below the large are wide, they're angled in the direction of the trend. This is what we're looking for. This is the best of the best. This is rule number 1, and it's easy to recognize, guys. Most of you will have this on day 1. You may fight it on day 2, but you'll understand that advantage when the market is likely to continue in the direction of the trend. And all of this happens without the advantage of Fibonacci right now. All we're doing is we're looking at momentum. Once we have the momentum established, well, then we have to make sure that there's nothing in the way. Rule number 2, let me pull it up. Rule number 2 says that termination conditions must be false. S-Fits, I see your post. Once we go through rules, I will come back and we'll talk about them. And I love that you've got one winner so far. S-Fits, I'm going to make a suggestion. And guys, this is for everybody that's new. Annotate your charts, guys. Annotate your charts. Get in the habit of scribbling all over your charts. Tell me everything. Tell me why you got in. Tell me what you saw. Tell me where you got in. Tell me what made you nervous, what made you happy. Guys, if you get in the habit of annotating your charts every time you present one in class, I can give you the best feedback because it lets me know where your mind is. And if your mind needs a little shift one way or the other, it's easier for us to get to that point. So practice with the annotations as well. S-Fits, I'll be able to figure out what you were thinking probably, but it keeps us from having to type back and forth in the room when I look at your charts. So rule number 2, termination conditions must be false. Room to the profit target's true. Rule number 1 gave us the advantage of momentum. Rule number 2 is going to give us the advantage of a clear path. Guys, a clear path makes all the difference in the world. What is a termination condition? Well, termination condition is an area that may reverse the market. And it's based on a comparison of those same T3 trigger lines that gave us momentum. And then a couple select areas, guys. We're going to be looking on our large chart for termination conditions. And the areas that may reverse the market are divergence highs, these magenta lines that come from a loss of momentum at a pivot. Divergence lows, same thing. When this pivot is formed, there's a loss of momentum, and this cyan line prints off into the distance. We're going to look at yellow 1-to-1s. We're going to look at red Fibonacci resistance, and we're also going to look at blue Fibonacci support. For those of you that are brand new with the software, this is a great little map for you as well. What are you looking at when you're looking at your charts? You can see your trigger lines, smalls and large. Mid bands run through the middle. If price is below a mid band, it's magenta. If price is above, it's green. And then all those other areas, guys. But what we're going to use them for initially is we're going to make sure that we have a clear path. We're going to make sure that these aren't areas that are likely to stop the market. And in order to do that, it's a simple comparison. 2 things have to happen. The first thing is that price reaches an area, meaning that these dynamic Renko bars come down, and notice how they get to support. Price reaches an area. When price reaches an area, you're simply going to look at those T3 trigger lines, and if they remain above this area of support, This is an area that may reverse the market. This is an area that may create a bounce that makes it untradeable. But the bottom line is, and I think the key phrase is, price reacts to Fibonacci. These areas on your charts are the exact same price that the big investors look at. These are the same prices that they're going to react to, that they have prices waiting at. When John Novak created the algorithm for the software, when he was in the infancy stages, he had a friend in the pits in Chicago, and that person's whole job was to know where the institutions had their limits at, where they had their prices at. And John Novak called him every day for 6 months. And the guy in Chicago couldn't tell him where they were, but what John could do is tell him where his fibs were. And he got to the point to where his fibs were typically within 50 cents of these institutional traders, creating bounce points. Not always reversals, but at least bounce points, reaction points. So when price reaches an area and everything remains above support or below resistance, you've reached a termination condition, and that path is no longer clear, which means that rule number 2 isn't met, which means that you're no longer looking for a trade. If we have to have a clear path, well, then we have to ask ourselves, when is that path clear? If price reaches the area and none of the triggers break through, the path is not clear, the area is not broken. When both your small and your large triggers get to the other side of these key areas, now the path is broken. Notice that I don't say when price breaks through. The only thing that price does is reach the area. But it's the trigger lines, small and large, that we want to see get to the other side of resistance. Resistance begins to act as support. There's one of those tails with odds favorable momentum. Awesome. S-Fits, congratulations. Once again, I'm going to respectfully request, do me a favor, write on your charts. Tell me why you're doing what you're doing. It'll help. It'll help you, I promise. I know you get excited, right? And I love wins. Wins make me happy. But let's make sure that you can repeat it. Let's make sure that your mind's in the right spot. So guys, no triggers through, not a clear path. Small and the large breakthrough. Okay, cool. That's my bad then. I thought those were one-to-ones. Thank you for that. Small and large breakthrough. The path is clear. Guys, give me a Y in the room if you're with me on this one. Pretty simple, right? No triggers, no trade. Both through, clear path. Termination conditions are going to happen all day, guys. Here's some termination conditions at a high. This pivot is formed, this loss of momentum is present, but this in itself is not a termination condition, guys. This is just an indication that the market's losing momentum. But when price reaches the line, remember the recipe, reaches the area, and the trigger lines remain below, now we have a termination condition. We have an area that may reverse the market. We have an area that may create a bounce. So if this termination condition creates a full reversal in the market, we're going to call that a strong top or a good top. And this is the precursor for the highest probability trade that you can take. Price reaches resistance, absolutely no trigger lines break through, even with odds favorable momentum. We're not looking for long trades because this is an area that may reverse the market. It may create a bounce. Same thing here. Price reaches those yellow one-to-ones and resistance, and none of the trigger lines break through. Guys, you can identify a clear path, or at least an opportunity, to stay out of losers by recognizing these termination conditions. They're also going to happen at lows. Price reaches those yellow one-to-ones, absolutely no trigger lines break through. No more short trades into the area, no matter what your trigger lines are telling you, because they've remained above. If this termination condition creates the full reversal, meaning that the large triggers go from red to green, we get odds favorable and ultimately a clear path, guys, there's another one of those potential entries for your highest probability trend trade. Termination creates a full reversal, strong bottom. Price reaches that pivot, that divergence low, trigger lines remain above. Now we have a termination condition. So guys, here's some great study picks for you. Terminations from highs, terminations from lows. Guys, giving you the advantage of a clear path each and every time you get into the market. And if we go back to our S&P, and I'm going to put my indicators back on it, I'm going to add Fibonacci back to this chart. I'm going to put those yellow 1-to-1s, those divergence highs and lows on there. And now we're going to be able to go through and you'll see termination conditions. Sometimes that market may turn, right? The triggers begin to weaken, that loss of momentum happens, and it gives it a pretty good push down. And then price pulls right back to resistance and absolutely no triggers go through. We can identify this as a textbook termination condition. Can do the same thing over here. Price pulls all the way back to resistance. Absolutely none of the trigger lines go through. Even though the trend is up, even though the small triggers are strong, this becomes our red flag. Don't go long yet. You don't have a clear path. And if you scroll back, you'll begin to see these over and over. You'll really begin to understand and see just how effective Fibonacci can be with just a little bit of scroll. Within 50 cents, price reaches, triggers don't break, and the market goes the other direction. All of your triggers break, the path is clear, and it pulls right back, and that support begins to act as resistance. These are patterns that you're going to recognize over and over. Clear path, pulls right back to resistance, continues to move to the next key Fibonacci area. So as we look at termination conditions, in the beginning I want it to be black and white for you. I want it to be either I have a clear path or I don't. That's your highest probability trend trade scenario. I'm going to introduce you to the look for your first medium probability trade, for a trade where the small issue exists. All the indicators are loaded for you, KM. Every line that you need that's provided by the software will show up without you having to do anything. And then, no sir, you're going to have to learn to read your charts. And that's what this classroom is for. Is we take the mechanical out of it. We keep it mechanical in our approach, but it's going to require that you read your indicators and that you make decisions. Hey, Tam, welcome to the room. You're welcome, KM. Great questions. But nope, when you open up your charts, have you opened charts yet, KM? You have, right? So when you open up your charts, man, let me show you guys a picture of what happens. Oh, guys, open those charts. It's phenomenal. When you open up your workspaces that are provided by Nexgen, your T3 Fibs Pro Trader, guys, it analyzes data set for the last 10 days, and there's literally thousands of individual Fibonacci calculations. It's done on 10 time frames. It is done on everything, and it goes back and it measures everything, and it comes up with all of these Fibonacci areas, guys. It's absolutely crazy. And what it does is it sorts them out, it weighs them, it gives them importance, it looks for areas of confluence and concentration, and that's what creates these amazing areas. These highs and lows on your charts come through from that many measurements. KM, that's okay. If you think you screwed them up by saving afterwards, there's two approaches to this. The first thing, and you're going to love this one, guys, is I got the smartest guy on the block down here, Jason in tech support. If you think something is sideways with your software, reach out, let him fix it, right? The other option, and I don't know how computer savvy you are, guys, I'm not a tech guy by any means. I'll show you, Tam. But if you go to the home page and then you go to the resources page, Cam, if you're comfortable with this process, just re-download the indicators. It'll overwrite what you may have accidentally messed up, and it'll give you fresh workspaces right there from the resource page. Let me give you that link. So you can have Jason in tech help you out, no worries at all. He's brilliant. Or if you're comfortable on computers, it's pretty easy to download the indicators, and they'll just overwrite. Do it with NinjaTrader Close. When you open back up, you're going to be rock star ready to go. And then Tam, using that screenshot, Nexgen provided you capture software. Do you see it on your computer? You should have an icon. If you don't, you can go to your search bar and type in TechSmith capture, and that'll bring it up for you. Man, S Fit's keeping busy. I can't wait to open these and look at all of them. So there's your capture software. This should be on your computer already. And then I'm going to do this two parts. I'm going to give you a fish and I'm going to show you how to do it. But what I'm also going to do is, just in case you need to study it later, here's the how-to straight from the user guide teaching you how to take those pictures and capture them. But it's really a very simple process. Once that TechSmith capture is up, where you get capture orange button, you have to open up your software. So once it's open, you're going to have this icon down here. Do you see it in the bottom of my screen? If you click on it, it's going to bring up your capture software here. Do you have your capture software? Let's just make sure. And guys, this is the most important part of what we do. This is how we have a conversation. I will always put a pause on the learning to make sure that you guys can take pictures. So Tam, do you have your capture software? Do you see it yet? We'll do it this way. Let me know when it's up. Oh, here we go. TechSmith capture. So go to your search bar, Tam, and I want you to type in tech, T-E-C-H. It's going to bring you to that TechSmith capture. And you're just going to open it. When you open it, it's going to look exactly like this. If for some reason you can't find it, I want you to go here and download it. It takes 8 seconds. It is on your computer, but if you can't find it, just re-download it. It's no worries. It'll overwrite everything. And then just give me a thumbs up in the room when you get there. And then we'll go through and we'll talk about it and we'll make sure that you can take a picture. And while you're downloading that, I'm going to proceed with that first medium probability trade that we talk about in this classroom, guys. And this is what we call a 50-50 trade. And a 50-50 trade doesn't mean that's your chances of success. What a 50-50 trade means is that 50% of your trigger lines have broken through the area and 50% of your trigger lines have not. The 50-50 look requires odds favorable momentum. It requires that best of the best look, those absolute strongest triggers, because we're relying on that momentum to create the potential for this area to break. But since it hasn't broken yet, it's not a clear path. And because it's not a clear path, whoops, I just got booted out of Discord, guys. I'll be right back. I know you guys can still hear me. I'm on my way. I've gotten really good at getting back in this room quick. There we go. Because you don't have a clear path, because the area hasn't broken yet, it'll be imperative that you don't sacrifice momentum, that you make sure that that momentum is its absolute best. And it's going to be imperative that you don't sacrifice the entry area. When we talk about entries, that's going to be a key component. So 3 scenarios really. In the beginning, there's only 2. For the brand new user, either an area is broken or it's not. Don't put the pressure of trying to read your charts while you're not a chart reader yet. Let's take 30 days, focus on the high probability trend trade. That high probability trend trade will take you to this 50-50 scenario, that scenario where the market has the potential to break because of the odds favorable momentum. I'm going to provide you rules. I'm going to provide you a checklist that's going to help you take this trade. But we're going to focus on our chart reading first, and it begins with making sure that we have momentum. And now we've talked about that clear path, right? And that clear path is the comparison. Price reaches an area. If the triggers don't break, we're not taking that trade. Is everybody comfortable with that? Price reaches these 1-to-1s, all the trigger lines remain above. No more short trades, no matter what the momentum says. We're not going short into this area. If a Fibonacci area creates a full reversal of the market, whether it's a top or a bottom, if the trigger lines go from green to red or from red to green, if you get that odds favorable momentum, if you have that clear path, Guys, there's another one of those circles. There's that highest probability, that best of the best, that trade that typically wins 70 to 80% of the time. Is everybody comfortable with this? And guys, I'm asking my new people, KM, S-Fits, Tam. Tam, I know you're working through a couple different things. And guys, I know a lot of you are on day one. It's okay to not be an expert on day one. Remember that you're brand new, right? You're a student. You're learning. So if there's something that we need to recover, talk to me about it. I got you. Guys, sometimes your market is going to reverse from nowhere. Even with a clear path, that market may go up. Even with odds favorable and a clear path, that market may go down. I'm going to introduce you to one more termination condition. This is the only termination condition that I will respect on a smaller, faster chart. The only time I will look for a termination condition on a smaller, faster chart. And that's when three divergences in the same price range print. It may terminate the trend. Remember that divergence is nothing more than a loss of momentum. So when that loss of momentum happens 3 times, it might terminate a trend. When you couple that third divergence with anything can happen triggers, it becomes even more powerful. And then when you take that third divergence with anything can happen triggers and that final divergence pivot is higher than the previous from a low, or lower than the previous from a high, it just adds a little more fuel to the fire. That's that head and shoulders. So guys, you're looking at 3 scenarios here. 3 divergences may stop the trend. That's one. 3 divergences with weak triggers may stop the trend. That's 2. 3 divergences when that third pivot's higher than the previous or lower than the previous from a high, that may stop the trend. And you're going to see these looks on a smaller, faster chart. And this look from a low or this look from a high is going to help you identify that change that may be happening on your higher time frame. So 3 divergences, you're going to see it on a small chart first. 3 divergences is also going to help you manage those medium probability trades. It's also going to help you manage those high probability trend trades. Because if you're in a trade and everything is going down and 3 divergences print, it's going to give you an opportunity to preserve your capital, to get out of that trade before things go bad, before it reverses. So we're going to use these divergences not only initially as a termination condition, but secondly as an opportunity to manage trades that need to be managed. And remember, 3 divergences in the same location is a little bit of a chart reading thing. So we're going to focus on the rules and learn how to read the charts, and we'll let management be the second part of the puzzle. So our large chart is provided as momentum. We have strong triggers, the separation between the small and large. We also have a clear path. We haven't reached an area. The trigger lines have a clear path. Rules 1 and 2 are met, guys. It's time to look for an entry. It's time to really let that magic happen. We're going to get the advantage of an entry area, and we're going to use a limit order to buy or sell a pullback in an area inside of favorable large triggers, which means that we're going to use a limit order. We're going to wait for the market to come back to us. If we're in an uptrend and everything says up, we want it to come down. No, Jay Solar, I didn't say that they're the only scenario that the market might change. What I did say is this is the only termination condition that I respect on the smaller charts, right? So let's clarify the language, and let's go back. 3 divergences on the small chart? No, not at all. Because you say it's the only scenario that the market might change, right? There could be a million scenarios where the market might change. Somebody with deep pockets may want it to go the other way. So what I'm saying is that if on my smaller chart, where the heck is my tops and bottoms? If on my smaller chart, let me get to it, 3 divergences print, well then I'll consider that a termination condition. And you're saying, but Mark, this fib is synthetically on the 13.2. Wouldn't that be considered a termination condition? Great question, Jay Solar. Do you remember when we talked about, and I saved the picture because this is a big one, the 13.2 and the 5.1 are 2 different charts, right? 2 different bar structures, 2 different trigger lines, and the recipe for termination conditions is Price reaches the area, where are my trigger lines? When price reaches this area, Jay, I'm in one of those 50-50 scenarios. Whoops, let me get back up here. I apologize. And this is such a good question, guys. And this is one of those questions that needs to be asked. These are the things that you should be asking if there's ever any sort of indecision. Almost there, almost there. All right, so Jose, let's look at it. I love this question. And you inspired me to make this picture too. So let's just look at the 13.2. 13.2 is a different size bar. 13.2 uses different triggers. No worries. Do you see how the small triggers are through the area, but the large triggers are not, right? This is a 50-50 scenario. Are you comfortable with that? Guys, is everybody okay with this? The smalls are through, but the large are not. This is a 50-50 scenario, right? So let's back it up. Whoops. Because the 5-1 is a different chart, because the 5-1 is a smaller time frame, because there's more movement, these moving averages reflect the movement on the smaller chart, not the larger chart. So Jay Solar, we have the potential to break with odds favorable momentum on the 13.2, right? That's the one that leads the way. That's the one that defines areas. Look at your 5-1. Your 5-1, this is the exact same fib. Because of the bar structure, because of the time frame, this sure looks like a termination condition, doesn't it? And this is where your brain is going to say, hey, whoa, that's a blue fib. My triggers aren't breaking through. I can't go short here, right? But the 13.2 says, Jose, it's got the potential to break with odds favorable momentum. Let's look for that perfect entry. So because of the differences in bar structure, your 13.2 and your 5-1 may have a different look as you come into these key areas, which is why we're using the 13.2's momentum, which is why we're using the 13.2 for the potential to break, because on the 5-1 it may be just a little bit deceiving. Does that make sense, Jose? Awesome. And let me put this picture in the room. And you know that you inspired this picture. And this is a lesson that I would have never thought of teaching if I hadn't gotten such a great question, guys. They're different looks, right? They're different charts. Even here, this may have been a 50-50 trade on the large chart. You still take the entry, and then when those three divergences print, it gives you an opportunity to exit that trade. A lot of times these lines on the smaller, faster chart are exactly what we need to give us a bounce back to that perfect entry, as long as the large chart says that we have the momentum and we have that potential to break. So great question. I appreciate that question. And I would have never thought to teach that, Jose, if you hadn't sent it that one day. So thank you for that. And guys, this is what makes the class so great. Sometimes I don't know what you're thinking. I don't know what you're wondering. And if you have a misunderstanding of a lesson, well, you might just keep taking that path. But if we get to have this conversation, I will always provide clarity. So let's find the perfect entry, guys. On the 5-1, when the rules are met on your large chart, on your small chart, you should have odds favorable momentum, right? Small triggers above the large triggers. Large triggers are wide. They're angled in the direction of the trend. My rules for entry, giving me the advantage of getting in where the market is likely to continue, say that I need to use a limit order, meaning I'm going to wait for the market to come to me, and I'm going to buy or sell a pullback. And guys, a pullback is nothing more than a small retracement in price that's counter to the underlying trend. And what that means is that if everything is screaming to the upside with odds favorable momentum and nothing in the way, I want my small chart to pull back. I want it to go down, and I'm going to have a limit order waiting for it. And that limit order is going to be at an area. And your areas to take a high probability trend trade can be Fibonacci support, it can be a mid-band, or it can be yellow 1-to-1s. Tam, you got it up and running. Nice job, man. Perfect. Great job. Fibs, mid-bands, yellow 1-to-1s. So we're going to use a limit order to buy or sell a pullback at an area, and that area is going to be inside of favorable large triggers. And I wanted to find favorable large triggers for you because as a brand new user, this is your best look, guys. This is your best case scenario. You will take trades eventually that are not inside of favorable large triggers. They may be inside of large triggers, but favorable means that your large triggers, which are native to the 5-1, and your small or your synthetic triggers, these stepped, it looks like they have little 90-degree angles on them. These are your synthetic triggers. Your synthetic triggers are nothing more than the large triggers on your large chart. So what happens is when the large triggers from your entry chart and your primary, your broad stroke of a brush chart, trend one on top of the other, it's going to give you the smallest window of opportunity. And that window of opportunity is that point where the market is most likely to continue. So in the beginning, hold out for that best of the best look. The trades originate from areas inside of favorable large triggers. This creates a smaller area for a potential bounce. But we're trading a pullback, right? We're waiting for a pullback, and a pullback begins on your smaller, faster chart with a reversal bar. And a reversal bar is just a red bar after all of the green bars, or if the market's going down, it's your first green bar after all of those red bars. And at the time of this reversal bar, you're going to identify your window of opportunity, your area where the market is likely to continue. For a long trade, your window of opportunity is going to extend from the highest point of support to the lowest point of support inside of favorable large triggers. For a short trade, your area of opportunity is going to extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. So you're going to be able to identify the beginning of the pullback, and you're going to take your large triggers from the top of the large triggers to the bottom of the large triggers, and you're going to recognize the areas that fall within. Remember, trades can come from a fib, a midband, or yellow 1-to-1s. I'm going to activate a limit order at the top of that window because of the momentum on the 13.2, because of the clear path on the 13.2. I'm going to enter at the top of the window, and I'm going to be in a trade right now. And I have the advantages in place. I have the advantage of momentum, I have the advantage of a clear path, and I have the advantage of an entry area. When I enter this trade, my initial stop will go beyond the window of opportunity to that point where the market should not continue. If price exceeds the window, I'm going to get stopped out of the trade. I'm going to take a loss. And this is where I remind new users that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Losers are a normal part of the positive equity curve. Losers aren't something to be mourned, right? Oh my gosh, I took a loser. Life is horrible. No, you will take losers. Go ahead and get your mind set there. The key is when you take a loser, if it doesn't do what it's supposed to do, did you have a statistical advantage? Did you have momentum, a clear path in an entry area? Did you give yourself a best case scenario, a fighting chance for a trade that typically wins 70 to 80% of the time? And if you did, you're going to develop trust, guys. You're going to develop trust in these rules because if you take 100 of these trades, 70 to 80 of them, you're going to do this. Profit target reached. As that trade pivots, as it heads in the direction of the trend, you're going to reduce your risk below that reversal bar, reducing the risk. Guys, in this classroom, I see people take trades with 2 to 3 ticks risk all the time because they pinpoint that area where the market is likely to continue. You'll be able to use Fibonacci for targets. Because you waited for the pullback, the distance from entry to target grows exponentially. You've increased your profit potential. Because you're using that reversal bar after the pullback, you've reduced your risk. Guys, this is your highest probability trend trade. This is the one that we're going to talk about every day, first hour of every day. We're going to talk about strong trigger lines and no termination conditions. We're going to talk about that study, right? Recognizing the tail. Remember, we don't trade tails. We can't. If we try to trade the tail, if we wait for that to form, that market is long gone. We trade areas inside of favorable large triggers. And then, Jose, here's another example. Awesome momentum. Everything says go, right? But we're directly into a one-to-one on the small chart. This one-to-one gives us the perfect bounce back to the amazing entry. So guys, this picture that I'm giving you right now, this is how you study. Circle those tails on the larger chart. Let's go back to it. Circle those tails, right? Every time you get odds favorable momentum, circle a tail. And then go to your smaller, faster chart. Back it up a little bit. Yeah, that was for solar. Odds favorable, no terminations, pull back to the mid-band inside of favorable large triggers. And this market goes down 5 points before it decides to reverse, guys. 5 points. That's amazing. For most of you as new users, you're out of that trade with $300 waiting for the next opportunity. Let's do a bar by bar. What do you say? Let's get rid of the cheat circles. Let's go through that entry one time before we move on. Termination condition creates a full reversal. Full reversal provides odds favorable momentum, right? Odds favorable momentum gives me a clear path, both the small and the large are through. Give me a why, new users. Let me know that you're with me. We're reading the large chart right now. We're making sure that those advantages are in place before we decide to enter the trade. Odds favorable momentum. Is everybody comfortable with this look? TAM, SFITS, KM, we good with this one? All my Jose's. This is your best of the best. This is the strongest triggers. Can you guys hear me? Price has not reached an area, which means that we don't have a termination condition. So I'm going to look over on my 5-1 chart. Everything says down, but my triggers are up. I don't have favorable large triggers yet. But as that market continues down, you'll notice that my large and my synthetics begin to work their way down, and the market continues down, and you have this feeling of dread, this, oh no, the market's going without me. Be patient. Trust the process. Right now, we're waiting for a reversal bar on the 5-1, and that reversal bar is going to have us identifying our window of opportunity. Everything says down. The path is clear. The momentum is its strongest. And guys, here is your reversal bar. So you can take your drawing tool, if it's in the moment, and this is great for people, from the top of the triggers to the bottom of the triggers, right? This is where I'm looking for that area. That's huge. But remember that the rules say your window of opportunity is from your highest point of resistance, Fibonacci, to your lowest point of resistance, mid-band. Guys, now your window of opportunity is tiny. Your job as a rules-based trader is to put a limit order a couple ticks below that mid-band. This mid-band is going to work its way down. These triggers are going to work their way down as the market works its way up. I leave myself typically a 2 or 3 tick cushion. And that market comes up, and see how the mid-band's coming down, that window adjusts. I'm going to make sure that I'm 2 ticks below, right? I don't want to trip over pennies and miss dollars. And boom, straight to the tick. There's my reversal bar. At this point, you're looking at approximately 2 ticks of risk. The typical new user who enters at, what is that, 36.75? Down here at 34.75, you're already $100 in the bank. You're already banking on it, and you're only looking for 32.75 to take $300 in profit. On a high probability, nothing in the way, everything going right trade. Guys, you can study this over and over. Scroll back on your large chart, everything says up. The momentum is strong, pulls right back to support, right inside of favorable large triggers, and it goes from 48 to 51, about 3 points worth of profit, and then a third divergence prints. And that third divergence printing says, hey, it might push lower, Mark, and I'm going to exit that trade. I'm going to make a little money, I'm going to get out. I'm going to have a small winner and absolutely no loser on it, and I'm going to wait for the next trade. And then when that termination condition creates a full reversal, gives me odds favorable, guys, there's that 50-50 look. And there's a pullback straight to support, straight to one-to-ones inside of favorable large triggers. And sure enough, that market goes up. KM, are watching videos of the pros doing trades going to make you a better trader if you don't know what they're doing? And guys, there are no videos of pros doing traders that I know of. If you really want to do that, buy the software and go over to Traders Chat. What's Traders Chat? Guys, Traders Chat is where people that have owned this software, some of them upwards of 15 years, are posting what they're doing. So you can go over there and take a look. I don't think you're allowed to, I don't know that you're allowed to post in there as a demo, but KM, go over, look at what they're doing. Cisco made money all the way up, right? Somebody made money all the way down there. Somebody made money all the way up here. But if you don't have any idea why they're doing what they're doing, it's not going to make you any better, right? But go over there and take a look. Guys, the software works. The software is the best software in the world. There's no doubt in my mind. Tam, when you open your software, you're going to have workspaces for futures. You're going to have crude oil. You're going to have the S&P. You're going to have all this stuff. I believe I just sent Mark Dean a message saying that you may need a little help jumping in, getting set up. But when you open up your software, Tam, when you open up your NinjaTrader, you're going to see File, Workspaces, and under Workspaces, you're going to be able to open up whether it's the S&P, whether it's NASDAQ, whether it is crude oil, and then that's going to give you this two-chart scenario to look at. Cool? I don't have NinjaTrader 8 open right now. Mark Dean can walk you through that process as well. And again, I'm a big fan of teaching people to fish. So opening NinjaTrader 8, building new charts, turning on trade markers, connecting to your live account, all the good stuff right there. But you're going to see under workspaces, you're going to have the opportunity to pick your workspace. Give it a second while it calculates, and it'll get you exactly where you want to be. So guys, we went through, and I think we covered them, right? We talked about odds favorable momentum. We talked about termination conditions, providing a clear path. And we talked about how to find that entry area, that absolute best of the best. Is everybody comfortable with what we're talking about right now? I want you to remember, if you're brand new, it's my favorite picture in the whole world. You ready? If you're brand new, if you're on day one, if you're on day two, it kind of feels like drinking from a fire hose or a fire hydrant. It's a lot of information coming at you in the beginning. That's why we keep it simple, guys. That's why we keep it focused. That's why the first hour of this classroom is dedicated to building a foundation. And what you're going to do, and I'm going to show you the picture that I made. I want it to be incremental. I want it to be step one leads you to step two. Guys, the first thing you need to be able to do, and this will take you 8 seconds to master, is you need to be able to recognize the trend. You need to understand whether the market is going up or down so that you can adjust your line of thinking to only looking to trading with that trend. The second piece of the puzzle, the second bite of the elephant, is being able to identify strong trigger lines, making sure that you understand when that market has the potential to continue in the direction of the trend. When you're comfortable with odds favorable momentum, rule number one, well, then you're going to work on your termination conditions. Your third step is being able to identify areas that may reverse the market, creating an understanding of when an area is broken, when it's not broken, and ultimately when it has the potential to break. When you put these three together on your large charts, that's when you're going to begin to practice your entries. That's where you're going to circle these tails. You're going to look for that best of the best, and you're going to take pictures. You're going to post those pictures in class, and you're going to post those pictures into your spreadsheet. I'm going to provide you, brand new users. Here's a checklist. Every time you take a trade, go through the checklist. Is the checklist met? Write these rules on your chart. Make sure that you're following the rules. Setting up for long-term success. If you're one of my visual people, here's that same checklist. But I liberated pictures from the user guide. There's a good top or bottom, a termination that creates a full reversal. Here's your definition of odds favorable momentum. Here's your best look. When it's broken, when it's not broken, when it has the potential to break. And here's a great idea of finding those windows of opportunity. Guys, all of this is available for you. Every tool you need to be successful is put right in front of you. The challenge is you have to learn it. You have to study it. Guys, I'm giving you the best hammer in the world. It doesn't mean that you can build a house. You still have to learn how to swing that hammer, right? So I'm also going to give you a simple plan for consistency. As a brand new user, your focus for the first 20 days should be entries. Your first focus should be nothing more than getting in at the right spot, because great entries create manageable trades, guys. The simple plan for consistency in big bold letters and underlines starts with never fight the 13-2 direction. Don't fight the trend. And don't fight the triggers. Don't fight momentum. This is going to keep you on the right side of stuff. Get in there and break some stuff. Amen. In the beginning, your first trade, guys, your first 20 days, you're learning to read your charts. Focus on the high probability trend trade. Take pictures of the high probability trend trade. These are my entries. This is my entry for a short, right? Replace my picture with your picture. But you'll notice that it's consistent. Small's below the large are wide, they're angled in the direction of the trend. Price has not reached an area. And guys, I steal these pictures from you all day long. On the small chart, there's a pullback directly to an area of resistance inside of favorable large triggers, and money gets made. I want to be able to repeat this, so I take this picture and I put it in my plan, right? Do the same thing with a long entry. Every trade is going to need to be managed eventually, guys. You're going to focus as a brand new user on a very mechanical approach to entry, a checklist-based entry, something that removes opinion. Do the same thing with your management for the first 30 days, guys. Keep it mechanical, pragmatic, opinionless, right? Hope-free. Your initial stop's going to go outside of that window of opportunity. Your great entry at the mid-band inside of favorable large triggers, you know your window of opportunity, and your stop initially is going to go where the market shouldn't go. Once you're in that trade, there's only two options. You're either going to get stopped out, you're going to take a loser, it's a controlled loser, right? You're not letting it run 30 points against you hoping that the market goes. You're saying my rules aren't met anymore, I don't want to be in that trade. Or you're going to get one of those reversal bars. And if you get a reversal bar, you're going to reduce your risk from outside of that window of opportunity. You're going to put it right above, 2 ticks above that reversal bar in the direction of your trade. Because this is going to reduce your risk. And even if this trade goes against you, now you've cut your risk in half. Your losers are smaller. Your winners become bigger. Nothing to do. You're either stopped or your first target gets hit. Guys, the mechanical approach has your first target right at $100. When the rules are met, $100 it's almost guaranteed, it feels like. And I take that $100, the money goes in the bank, I'm getting confidence through the memory of success, I get that dopamine kick, and I move my stop to break even because now I have nothing to lose as I wait to see if that market goes to my next target. My next target is only $200 away, guys, from entry. So 100's in the bank, I have nothing to lose, and there's nothing for me to do now except either get stopped out, break even, which means 0 loss, or it goes to my next target. And if it goes to my next target, That small little movement on 2 contracts is $300 worth of movement. And guys, I want you to see something. If I take 1 trade a day and win, that's it. That's $300 a day, right? That's $1,500 a week. That's a $6,000 month, which puts me at a $72,000 year from 1 successful trade. You're going to take more trades than that. What if I get stopped out break even? Well, then that's a $100 day, right? And that's a $500 week. And that's only a $2,000 month, which is only an extra 24 grand in your pocket from a trade that doesn't work, right? That's 1 trade. But here's the cool thing, is that $300 trade on a 10 lot is now a $3,000 trade. So we're not looking for more trades. We're looking for better trades. We're looking for the best opportunities, the highest chance of success, the entries where the market is likely to continue, managing our risk and focusing on our profits through a mechanical, methodical approach initially that teaches you to read your indicators. A mechanical, methodical approach initially that gives you a plan capable of winning more than it loses. Is everybody comfortable with that? Guys, I'm putting this is the KISS plan, the simple plan. This is your path. You can fight it if you want. I've never had anybody stick to this checklist 100% and do worse than 70%. That's it. Your job is to go back and test it, right? You can't sit around and watch other people test it. You need to test it. You need to simulate. You need to embrace the path. Nobody ever got better at golf watching golf videos. Nobody ever got better at tennis watching tennis videos. Simulate your trades daily. Practice the rules. Learn them so that they're easy, right? Repetition creates recognition. Guys, don't fight the path. And then when you're good at that high probability trend trade, let's work in a medium probability trade, right? Let's keep you busy. Remember, that medium probability trade is that 50-50 trade when areas have the potential to break but they haven't broken. Guys, when I take a 50-50 trade, this is my own personal experience. When I take a 50-50 trade, when I have an area that has the potential to break but it hasn't broken yet, I insist on the perfect entry on the 5-1. The first thing that I look for is no divergence. Making sure that I don't get that momentum loss, because remember, there's only 3 advantages that we look for. And if it's a 50-50, we've already given up a clear path. So I'm making sure there's no divergence. I'm making sure that my triggers are strong, and I'm making sure that my window of opportunity is its absolute smallest. And there's a checklist that says exactly that. And if it says if divergence prints, there's no trade. But guys, because it's a medium probability trade, it has to be managed a little differently. It has to be managed assertively. My initial stop's still outside that window of opportunity. I'm still using that reversal bar. But my first contract comes off at that trouble spot. My second contract's 200, and if divergence prints during the trade, well, then I'm out of the trade. I'm not sure, Gary. 3 divergence, the head and tail look on the smaller chart is still a termination condition? Absolutely. 3 divergences, Safia, on the smaller chart is considered a termination condition. It may reverse the market. No worries. So guys, that's your plan for simplicity. That's your plan for staying focused. That's your plan, you're welcome, for giving yourself the advantages. Let it be simple initially, guys. Let it be incremental. Let it be focused and concise, and don't cloud it up with other things. Directly into a termination condition. Absolutely no reason to take a trade because you've reached an area that may reverse the market. Once again, directly into a termination condition. You've reached an area that may reverse the market. 90% of what you do during the day is going to be sitting on your hands waiting for the advantages. 10% is going to be taking trades when the advantages are present. So guys, that's my first hour. It went a little bit long today, which I'm totally cool with, especially with the newer users. Those of you that have already posted in the room, awesome. Second hour, we're going to come back and we're going to start looking at all of your posts. Once we look at all your posts, we're going to talk about them. We're going to talk about entries. We're going to talk about exits. NASDAQ is a freight train today, without a doubt. So guys, I'm going to go on a quick break. When I come back, I'm going to scroll to the top of the day. I want you to see this. I have to scroll all the way up and backtrack, and I'm going to start looking at your trades. I'm going to start looking at everything that you guys have posted. I'm going to get kicked out of Discord real quick for the third time, I think. Happy Friday, everybody. And I'm going to bring my charts back up. If you have a question, post it in the room. If you have a comment, post it in the room. I'll address it. If you need help with any of these concepts, post it in the room, guys. Remember that this is your class. Every time you post a question, it's like having a private session. So I know that you don't want to manipulate time. I know that you don't, oh, I don't want to be that guy that asks all the questions. Be that guy that asks all the questions. Be that girl that asks all the questions, guys, because you're going to get to where you want to be, and the other 47 people in this room will not pay your bills, right? They will not make you a great trader. It's up to you to do that. So be vocal. I'll get you the answers that you need. I'll be back in about 5 minutes, guys. Alrighty, let's get into that second hour. I'm going to scroll up to the top of the room and I'm going to start looking at the pictures that you guys posted, guys. I'm going to be talking about your pictures and using that high probability trend trade as a basis. If you've showed me a picture and it doesn't have rules on it, I'm going to compare it to the high probability trend trade. If you're taking trades outside of that high probability trend trade, then I am going to respectfully ask you to help me out with that a little bit, to let me know what you're looking for so that I can help you and give you the best feedback ever. So I'm going up to the top and I'm trying to find the first one today. And here we go. Safia, you got us going today. Notice that Safia uses a checklist. She posts her checklist right onto her chart so that she knows what she's talking about. Does she have odds favorable momentum on her large chart? Absolutely. Odds favorable momentum on her small chart? Absolutely. No divergence on the small chart? Absolutely. Is it coming from a good top or bottom on the large chart? It is. And does she have an area of entry? Notice how this is a perfect rules-based checklist trade. So Safia, your entries are as good as anybody's, right? Your entries are there and wonderful, and I like that. So Safia, here is your next level. Ready? This is your next job because your entries are amazing. Every time you take a trade, I want you to annotate. Why did you exit? Because you're working on management, right? So Safia, with all that momentum, with everything in your favor, with the perfect entry, virtually no risk, profits already taken, and your small triggers are now angled up in the direction of the trade, what made you jump ship? Right? So this is the next step, just getting a little more out of these trades. Having a reason. So if you get in the habit, guys, when you start getting this is why I entered, and I see that a lot. This is why I entered. This is why I entered. And man, great entries create manageable trades. But management, it's like eating an elephant, right? And to eat an elephant, you have to do it one step at a time. So this perfect entry creates a management opportunity. But there's nothing that says that market's done yet. And it's okay if it's preset. If you're like, well, that's my target, no worries. But make sure that you have reasons, right? And I'm up at the top. I can't see questions right now, but I'll be back. I like this picture. Termination condition, it's the weak bottom, and then everything rolls. So you're good. The large get above, the small get above. 50-50 trend trade, nice annotation. Bad top pulls all the way back to support, all the way back up. Things don't agree, and you're like, you know what? I'm going to let it work itself out. These are some of my favorite pictures, guys. These are the I'm going to let it work out and wait for my rules to be met before I take a trade. Gary doing the same thing. He says, I have a potential trade setting up, and I see it, and my checklist looks solid, but I have news coming up, so I'm going to sit on my hands, and I'm just going to wait. And then Carl, you have odds favorable momentum coming from a termination condition. Everything says up. Guys, I want you to see Carl's entry. Right at a mid-band inside of favorable large triggers, and he takes it right up. Beautiful exit. Consistency, right? Termination creates a full reversal. Full reversal gives odds favorable momentum. There is your no divergence, pull back to support. Absolutely picture perfect entry here. You were waiting for news at 6:01. And guys, there's one of those 50-50s, right? Smalls above, large below, no divergence, strong triggers, tiny window, and it gives you an opportunity for about 4 points to get up to that key spot. It's a great read, Gary. And then, sorry guys, when I go top to bottom, I do this. Jose, there it is right there. The checklist is on that KISS plan, right? Which image, Sophia? I'm so sorry. Did you want me to go back to? The one that I annotated? This one? I got you. Sorry, that's one of the things, guys, is I have to scroll top to bottom. And let's do this for you guys real quick. You ready? For those of you guys that are working off of checklists, you're so welcome. Let me take a picture of this. That's a pretty big one, but there's a checklist. If you wanted to break that down into a checklist, guys, turn it into a Word document. Print it out, put it on your desktop. It'll help you out. All right, scrolling back up. So far, a lot of great trading going on, guys. A lot of great chart reading going on. Everything that you do is nothing but a chart read, making sure that your rules are met each and every time you take a trade. And guys, sometimes I even get one in when the day starts. Whoops. What do you think? Odds favorable? Clear path? I missed the first one. I formed an opinion and I missed the first one, and I wasn't going to miss the second one, guys. I still have strong triggers. 2 divergences don't scare me, right? How come? Why am I still willing to take this trade? Because on a high probability trend trade, guys, 2 divergences are not a termination condition. 2 divergences are exactly what I needed to get my push right back. No, I just missed the first one, Sophia. I didn't catch it. But when the second one pulled back, my rules were met. And here's the cool thing. I entered at the highest point of support. My stop was where the market shouldn't go. I took profits at my trouble area, and I took second profits. I wanted to be out at the fib right there at 300, but it smashed through it so fast that I put my stop right behind it, and it just came and got me. Guys, this was an easy trade. This was a rules-based trade. The first one was just as nice. I think, Sophia, it was rules met, right? If you took the first one, you might have taken quick profits and gotten to break even and then just gotten right back in, right? Because the rules were met. So, guys, my trading plan is the exact same thing that I teach you guys every day. My trading plan doesn't have any special stuff to it. My trading plan, I have checklists. Hey, S-Fits. I have rules. I have my best of the best looks. I have what will get me into the market, and I have what won't, what'll keep me out of the market, the same way you should. All right, Ron, good morning. You're quiet today. Let's see what Ron did. Ron is a big fan of odds favorable momentum. And when he has a clear path, he's going to jump in and out. He's going to make us $100 on 3 or 4 or 5 contracts. And then he's going to wait for the next setup. Everything he does begins with odds favorable and a clear path. And then quick entries. In and out. Quick profits. Guys, if I look at the last 1,000 trades Ron's taken, 999 of them look exactly the same. Consistency, doing the exact same thing. Statistical advantages, that's where it's at, guys. That's what's going to get you where you want to be. All right, Debbie, let's see what you did. Debbie says when everything says up and the path is clear, she's going to take a pullback to an area inside of favorable large triggers, and she's going to get paid all the way up. Debbie, rock star as usual. And there goes Ron again. Backside of a trend trade. That's all it is, right, Ron? Ron, this is kind of a cool little way to incorporate other people's plan. The high probability trend trade could have taken the entry, Ron's like, man, I was grabbing coffee. But that's a high probability trend trade with every rule met. I can still get paid. Nice job, man. I like that. That one makes me happy. You can't see me. You might hear it in my voice. I'm smiling right now. New users, remember that this is your class. If you have a question about what you see, it's cool to ask, no worries. And then Brian, just want to remind you, you did a great job. There's a test picture. Just making sure that he can do it. Solid. Gary, let's see what you did. I love it. Gary says, when a termination creates a full reversal and I get odds favorable, you better believe I'm making money on the way down. And you followed the stop behind the yellow reversal bar. Beautiful. Gary, what a great trade. Every chart agrees, guys. Every chart says that we were going down, and it went down. And then Jose, small below the large, but it's losing momentum, right? So you're forfeiting momentum, but you do have a clear path. You got in at the mid-band. And because you were losing momentum, you let that second higher divergence with weak triggers take you out. Great management on an awesome trade, Jose. Safia. 50-50 trade. Smalls outside, no divergence, pull back to the area. Beautiful. Safia, what made you exit? Absolutely. Jose, so yes, divergence on the 5-1 means no trade, right? So when you look at the checklist, no divergence is already a condition. I put it in there to reiterate for new users. If divergence prints no trades, and the reason I did that is because that becomes a key part of the management on a 50-50 trade. If you take that trade, if the conditions are met, if it's all yes, and then a divergence prints while you're in that trade, it becomes an exit condition. That's why I did that. So divergence on the 5-1, no trade. It's the same thing 3 times, reminding you that this isn't a home run trade. That's a little safeguard that I put in there for the new users. Medium probability trades typically are not home run trades, guys. Medium probability trades are just that. Let's get in, let's get paid, let's GTFO, and wait for the advantages again. Yep, and Jose, remember that entries are the first part, right? Your entries have been really solid. Everything that you've shown me lately has been really solid. Management is going to become your opportunity. When the entries are good, management's that next piece of the puzzle. And guys, it's a process. But what a lot of people do, and I'm not suggesting that this is what you did, Jose, but what a lot of people do is they try to get to the finish line. They say, I've got the software, I'm going to be brilliant, I'm going to make $1 million. And they forget to embrace the process that gets them there. They forget that you need odds favorable momentum. And because I bought the software, I need to win, not I need to learn how to use it. And a lot of people take half lessons, right? It's like taking a half truth and kind of trying to figure something out with it. But great entries, look at this entry. Oh my goodness. Create manageable trades. And Safia, your large chart said, don't you dare exit this trade. And the trading gods are laughing at you here. But beautiful entry. Notice at the checklist, everyone. Beautiful. And that was your ATM. Don't clear it, just move it. And if it moves too fast to catch, that's cool. Yeah. But let's look. An accidental exit, just for grins. From 17.7, so that's 10 points on 2 contracts. What is that, $400, Safia? In a matter of seconds? You mad about $400? I hope not. What's awesome, guys, is when you get so good at reading your charts that $400 pisses you off because you knew that there was so much more to be had. 400's pretty awesome. I feel pretty good about that. All right, where are we at? Jose trades. Yeah, he does. Every day. Odds favorable. Everything says down. Entry at the area. Just doesn't work. Jose, so one of the things that I do is I recognize patterns, right? That's my whole gig, guys, is recognizing patterns. So, Jose, I also recognize patterns in you guys. Are you ready for a pattern that I'm recognizing in you? And I hope that this becomes helpful for you. Let me scroll to the bottom. I want to make sure that you're here for this lesson. You ready? Jose, if I had a catalog of your trades over the last 3 months, I would say that 80% of the time, and I'm guessing here, but 80% of the time, when you trade directly into a pivot stop out on your 21 chart, you get your ass kicked. Go back and look at them. When you trade into termination conditions on that higher time frame, you tend to lose. No worries. So you see it though? And I think that this is something that's happening a little bit. Yeah, so if you're going to have the chart, do it. Otherwise, I love everything about it. It's a beautiful trade. But this is where you can eventually add that chart, right? And give you a little extra information. Jose, you can also see that you had a reversal bar with a breakout bar that created an HVA that kind of solidified the idea that this may hold a little bit. No worries. Just things that I notice. And I'm not telling everybody, go get a 21 chart. But if you're going to have it, I'm going to help you use it a little more effectively. Why not, right? You're very welcome. All right, scrolling back up, guys. Scrolling back up. And if I miss a question, please let me know. I will from time to time, guys. All right, Gary. You know what I love seeing? I love seeing you guys posting something and then other people putting fist bumps and money signs. And I like the community in here. Gary, that was the one that you exited, right? And then it pulls all the way back to a mid-band and one-to-ones. And you take a short off an area likely to stop the market and get paid all the way back as it closes the gap. Gary, that's a nice trade. Good looking. All right, S-Fits, are you with me? We're going to start looking at your charts. Whew, that's hard to read, my friend. So let me see if I can figure out what you did here. So we had a divergence, right? Pushes you up. And then the small triggers are strong. We get the trend change. Wow, that's small. But your large triggers are still down. It looks like you just traded into resistance and perhaps took a long trade on a 20 lot. So what got you in, S-Fits? Jose Solar, yellow bar doesn't mean reversal. It's a reversal bar. Does that make sense? The same way a red bar after a bunch of green bars is a reversal bar, a yellow bar on a market flow chart is just a reversal bar. If you don't have any rules to go with it, it doesn't do much. But if that yellow reversal bar prints, and maybe your large chart is right at a termination condition, well, then you start getting a little information. You're like, uh-oh, I got a reversal bar right at a termination condition. Good stuff. All right, so I like it. You have a potential bottom in here, S-Fits. It's hard to tell on this chart, but what I do notice is that your synthetics are down and your large are up, which means that we've got a little disagreement here. and you're not in an area inside of any large triggers, I'm glad that one worked out. And it's hard to tell with your large chart. If you'll do me a favor, and I know I'm so needy, I really am. Do me a favor, stretch that large chart out a little bit. Let's see what's going on there, right? Let's take that information. Make sure that we have odds favorable. Make sure that the path is clear. No worries. So remember, those blue lines are only good. Change your mentality. Rules met, rules not met. Blue lines are great. They really are. The same way red lines are great. But that blue line got absolutely smashed, and so did that one. And that red line got absolutely smashed. But if you let that red line hold rather than anticipating it and let things agree a little bit, then it creates that opportunity that's a lot lower risk, it's a lot higher probability, and it creates a better chance, right? It creates a better look for you. And that may have been, if with the addition of another chart, that may have been just an amazing trade. It's hard to tell with what you had going on that chart. And let me open up your second one. Let me see. So that was your first entry, right? And then you're coming from the blue chart. And then you take an exit, which I like. And then it pulls back. See how those large triggers are heading up, your mid band's heading up, your small triggers are heading up. I dig that one, S-Fits. I think that one, your large chart's starting to put in that bottom, your small chart's showing it. And now you're kind of starting to get that agreement, right? It's still going directly into resistance. Great exit. No reason to hope. I dig it. That one gives me a little more information. I think that patience piece is going to yield some results for you. And I realize I just got kicked out. I'm coming back. I know you guys can hear me. I'm going to say this while I get everything back. The most difficult thing for traders to do is absolutely nothing. The hardest thing that you will ever do as a day trader is do absolutely nothing when there's nothing to do, when there's not a statistical advantage. And that means that there's a lot of patience that goes on with what we do. Tam, good to have you back online. Did you get those charts up? You're good? Dean got you taken care of? Yeah, I did for just a second. Can you hear me again, S-Fits? All I was saying, I wasn't talking about your charts and the lag. What I was talking about is doing absolutely nothing when there's nothing to do. Being a little bit patient here and waiting for it to be better. It makes more manageable trades. Now you have a pivot to put a stop behind, right? Now you have a clear target. Now you have large triggers up. And that little bit of patience is going to create an advantage for sure. All right, scrolling up, scrolling up. Third trade of the day, S-Fits, we got you again. Let's take a look. And then you're back in off of support and out due to resistance. You are definitely taking advantage of Fibonacci right here. Your large chart gave you a second higher divergence, suggesting that the market's likely to hold. And from what I can see, all of your trigger lines are above support, which means that it's likely to hold. And you took the opportunity and made some money on it. Nice job, S-Fits. You're coming into your own a little bit. And then you get 3 divergences. They're all going higher. And I'm not sure about this trade. Yeah, you got lucky here. See how they're flat? Prices on the wrong side of everything? That's that patience piece once again. Everything says up on your large chart. Just being a little patient, right? Let all your charts agree. Make it simple. Good one. Yeah, and there's no, so where do you put a stop, right? With everything on the wrong side, how do you gauge it? No, oh, you went short. So you went down. Ah, I thought you went up because you were in an uptrend on your large chart. Okay. And your smalls were going up and your large were going up and you had three divergences and a termination that created a full reversal. Short here is you got very lucky. No reason. Smalls are up, large are up, synthetic are up. Everything says up. At this point, this is a sit and wait. Does that make sense? Every indicator on every chart suggests that the market is going up. And this is where not finding the trend, not finding the triggers is going to create advantages for you. It's going to keep you from getting lucky, and it's going to let it be calculated a little bit. Yeah. And then look for long opportunities over here when everything's going up. Great pictures. And thank you for posting. It's hard for people to post in the beginning. This is how people get to where they want to be, though. The more you post, the quicker you're going to get to where you want to be, because we're going to have conversations about everything. M, termination, full reversal. Everything says up. It's into that mid-band and those one-to-ones. Looks like 50-50 right about here with no divergence. That was probably your safest shot to get up to that next area. Nice job, Em. And then Tam, you are in the game. Nice job. Jose. Trending up, no terminations. You take a little momentum style pop back. Make some money. Nice job, Jose. That's just plucking a little bit out of thin air there. Nice. And then Tam, you are on with the pictures. I love it. Good job. That's it. That's how we're going to talk. Safia, everything says up. The path is clear. The entry is perfect. The exits make sense. Safia, great trade. Beautiful entry. Look at that, guys. Odds favorable, nothing in the way. Quick profits on the first, out at the potential trouble spot. I bet that one felt good, didn't it? Super calm. Triple dog dare you to come take my money. Nice. All right, coming through. S-Fits, we got another one. Yeah, everything says up here, right? But you're trading directly into a termination condition. So S-Fits, good one. I like it. Waiting for that pullback, right? Oh, you went short. So you, once again, S-Fits, fighting momentum, fighting direction, putting all your faith, all your hope into one little red line. That's okay. That's normal. Right now, you're doing everything and you're going to sort it out, right? That's kind of how it works. Let me share my favorite book with you. Where did it go? And this is a joke. This is tongue-in-cheek. How to Commit Financial Suicide in One Easy Step. By John Novak. He wrote the book. Note that only one page has any information. All the other pages are left blank intentionally. Chapter 1, warning signs your friends are in trouble. They're trading against strong triggers. Guys, remember that strong triggers mean momentum. There's no reason to fight that momentum. It's like standing in the highway with a semi, fully loaded, 90 miles an hour, and you hope that you putting up your hand stops that truck. Even if he wants to stop, he's going to flatten you. Yeah, predictions cost money. Hope, opinions cost money. It's okay. You'll get burned enough that you'll stop it. Warning signs your friends aren't paying attention. They trade into termination conditions. Guys, these are the two easiest ways for you to stay on the right side of everything. It's kind of embrace this little joke for what it is, but pay attention to it, right? If everything says up, go long. If everything says down, go short. That's the easiest way. The second you try to predict, it's all over. The market doesn't care what you want. It doesn't care what you hope. It doesn't care what you think. The market's going to do what the market does, which is why we create rules, which is why we have a checklist that embraces advantages that have been proven, that have been back tested. Guys, there are clients that have tested this methodology back over 500, 600, 700 trades, and the results are consistent through everybody that's done it. 70 to 80% winners. All right, Jose, let's see what you got. 50-50 coming from a good top. Divergence prints, right? So Jose, let's talk about the 50-50s. That's okay. That's great self-evaluation. S. When you can look at your trades and go, man, I got lucky. That's great because it means that you recognize that statistical advantage probably wasn't there. So hey, Jose trades, 50-50 trade. One from the best of the best, I dig it. Opportunity to make money. 2 divergences on a 50-50. That's a tough look, my friend. That's a difficult way to win trades. Missed the first one, so you took the one that wasn't as good, right? And look at, and Jose, I'm marking up your charts a little bit today, but I want you to see something, guys. When we talk about the window of opportunity, right? Your first window of opportunity on the best look is right there. On your entry, that's your window of opportunity. See the difference? It's kind of a big difference. Here you have tight little risk. Let's get in. Let's make sure nothing changes. Here you've already had 2 losses of momentum. And now your trigger lines are spreading apart, which means that your synthetics, your large, aren't following. Creates challenges. Guys, if you miss the first trade, it's okay to skip the second one that you hope works. So, KM, you're done with betting? I think that's smart. I think gambling's for silly people. So what if, KM, you had a plan that had been proven to win more than it lost? What if every time you entered the market, you could have a statistical advantage? That would be pretty cool, right? What if you had something that had been proven over decades? So that's what you have. So don't go watch videos of people trading, right, KM? This one's going to piss you off a little bit. Learn the rules. Practice the rules, right? Learn the rules. Follow the path. I'm not going to leave you. You're going to be stuck with me. We're going to go through it. Ask anyone in this room. I am a royal pain in your butt because I'll hold you accountable. Keep it on simulator. That's okay. None of us are. No human in the world is a good rule follower. Never met one. Even the ones that are good rule followers still screw up every now and then. That's just human nature. It's okay. And that's what simulator's for, guys, to practice it, to practice the rules, to post the rules in class, to make sure that you're following the rules. KM, I teach the class. I still break my rules some days. I still form opinions some days, right? Ask anybody. I will annoy the hell out of you. Yeah, getting better with patience. It happens. Patience comes through trust. Patience comes through believing that this is going to provide you more winners than losers. Patience comes. It's work, guys. I'm not going to lie to you. It's work. Patience comes from taking all these pictures of the rules met and seeing what happens, right? 200 pictures in here. And you guys want to know the truth? They're not all winners. Why? Because the entries create a statistical advantage and you have to be okay taking a loser every now and then. So KM, what we're going to do is we're going to stop focusing on the wins and losses initially. We're going to focus on the execution, because the execution of a process that creates more winners than losers is a recipe for success. And that's when you develop trust. That's when you get that firm belief in the reliability, the truth, the ability, the strength, right? That's when you get confidence. That's when you have faith. That's when you're free of suspicion or doubt. That's when the certainty presents itself. That's when you lose distrust, when you lose skepticism. And when you stop expecting to win every trade, man, do I have everything on file here or what? When you stop expecting to win every trade, you're going to start winning most of your trades because you're going to focus on the execution, not the result. I've seen it. I've been there. I've done it. Shogun, I have absolutely no idea. None. Sorry. Not a tech guy. But I would ask you, Shogun, if you've committed to simplicity, why on earth do you want to add a 21 mid-band to your 13-2 and 5-1 charts? What advantage will it provide for you? Or will it confuse you from making good decisions on a very simple plan that wins more than it loses? It's just something to ask yourself. Throwing that out there. So show me the mistake. Why are you still so hesitant to show me your pictures? Hey, Mark, I lost a trade. I made a mistake. I'm not going to show it to you, but how do I adjust my charts to make it make sense? Shogun, because I'm so fond of you, I'm going to beat you up a little bit. Show me your pictures, guys. Don't sit on your losers, wondering what the hell happened. Show me your losers. Let's talk about them, right? Let's get rid of them. Let's make losers go away through repetition, through practice, over and over again. You're still not showing me the picture. Show me the picture. Show me what you were looking at. Maybe the 21-3 had nothing to do with it. Maybe the mid-band wasn't expected to hold. Maybe we can make you feel better about taking the loser, right? All right, Jose. 50-50 trade. Mrs. Jose Solar. 50-50 trade, right? Not great, but okay momentum. What does that mean? No, Shogun. Pictures all day long. Pictures, pictures, pictures. Watch the tutorials. It's good. But when you practice, show me what you're doing. So, Jose, just a 50-50, right? So, KM, show me 100 pictures of you taking the chance of going long when the range bar turns green and short when it turns red. Show me 100 pictures. Show me a win percentage. Because right now, it just sounds like a guess. Tam, it logged you out when you signed in. So KM, you're telling me that you're developing a trading plan and you haven't even traded anything yet. Why not practice one that's been proven? Tam, you may have to log back in. Sometimes NinjaTrader's a pain in the butt. Just log back in. But KM, doesn't that make sense? Why on earth are you going to create your own recipe for potential success when one for absolute, definite, proven, back-tested, over and over success is being handed to you? Just throwing that out there. So why? Why would you say that, Jose? You have an area that hasn't broken, right? 46.97 hasn't broken. Your 21.3 has the best looking momentum you could ever hope for. KM, you don't need to formulate a strategy. I've given you one. Learn it. And then, when you learn it, incorporate your own ideas when you learn to read the charts, right? Learn the basics before you try to be next level. So Jose, it's a 50-50. You say no termination conditions. Okay, Jose, I think I just figured something out. Are you ready? Haha, I just had an aha moment with your stuff. All right. You say no termination condition. Man, Jose, I just had a light bulb moment. You're looking at the top of the bar, right? You're saying this hasn't reached an area, therefore no termination condition is present. Am I reading it right? Oh, Jose, we're about to go next level. All right, so Jose, here's the other side of that. You can't have both. You have to let this fib finish doing what it's doing before you decide that there's not a termination condition here, right? So it's one fib at a time. Hasn't broken, now it's broken. Hasn't broken, and still hasn't broken yet. When the large get above this area, if the large get above this area, then this becomes our next focal point, right? But until the trigger lines are done with what they're doing, we're going to stay focused on that area. Does that make sense? So not okay, because okay means, Mark, that doesn't make sense, but I'm tired of you talking typically. Termination condition. It's true, Jose, and it doesn't hurt my feelings. All right? So now we have a 50-50, right? So far, so good, natural progression. So check it out. Right here, it's still 50-50, right? This hasn't reached an area, but we're still waiting for the large triggers to break. So I remain in a 50-50 state until those large get above. And now my path is clear. And now, and only now, when the large get above, do I start gauging whether or not I have a termination condition in the next area. Does that make sense? Let this area finish breaking and then turn your eyes to the next one. And I think that's cool because that little bit of language, that simple idea that this has to remain a 50-50 until the path is clear, what it does is it takes this out of the equation. I'm going to black it out. And if this is out of the equation and it remains a 50-50, well, then you can start that idea that divergences can kill a 50-50. Does that make sense? I think that we just had a moment that's going to kind of help your world a little bit. So one divergence on a 50-50 is problematic. Two divergences on a 50-50 is even more problematic. And three divergences on a small chart just says, cha, done, gone, get out. Does that make sense? So you're creating extra scenarios. If there was a fib ahead, you would have stayed out. So what you did, Jose, is you just created an extra rule. Does that make sense? If there was a fib ahead, I would have stayed out. Well, there's a potential termination condition at 54. But it's not coming into play because we're still figuring out the 50-50. You created a whole new rule that has nothing to do with the here and now. And I know, I recognize it because I've done it. Because I've been exactly where you are. That I start looking so far ahead that I forget to read what's happening in the now. So this 50-50 with a divergence keeps most people out. 50-50 with two divergences keeps even more people out. 50-50 with three divergences should keep everybody out. Absolutely. So Jose, absolutely. If it would have reached the area, if hypothetically we had a fib right where my mouse is, then yeah, it's not a 50-50, it's a termination. and a 50-50, and it's a no way am I touching that with a 10-foot pole. Does that make sense? Did that help a little bit? I hope so. Let the 50-50 finish before we start worrying about what's next. Because the cool thing is, Jose, even if this ran smack dab into a fib right here, it's still a 50-50 with a divergence. And if you're focusing on simplicity, you did. You took a 50-50 with divergence, right? So you gave up a clear path, and now you're forfeiting momentum. So I like it. So how do we manage a 50-50? Let's go back to your picture. Dun, dun, dun. And I'm just going to take this from the Keep It Simple plan. How do we manage a 50-50? If you take the first one, that's cool, Jose. No worries. You're in. It's good. You're from a good bottom. Everything says up. When you enter this trade, this divergence line, this is your first trouble spot. Oops, that didn't type. Does that make sense? Because that's the point where you lost momentum on an area that didn't break yet. So this is your first trouble spot. This is a great spot to take profits. Get out, get paid a little bit, right? It's a medium probability. Things aren't breaking. You're already giving up momentum. Get paid and go break even. Does that make sense? I won't tell you where you should exit or where you shouldn't exit, but I will tell you that a very conservative plan on a medium probability trade says that if trouble is in the way, that's a great spot to take profits. And it's such a good concept. Let me show you. That when we define the medium probability trade, it has to be managed assertively. If there is trouble in your way, you may take a portion of the position off at that trouble spot. Nexgen won't tell you you have to take a portion of the position off at that trouble spot, but this is the wink, wink, nudge, nudge, Jose. You may take a portion off at that trouble spot. And what you're going to find is on these medium probability scenarios, you can still make money. You can still keep the powder dry. You don't have to take a loss, but there's no reason to hope. Get paid. That's what we're here for, right? Base hits. Base hits will pay the bills. Great picture. And once again, let me just kind of reiterate, your entry is beautiful. Great entries create manageable trades. Your entry down here at 44, what was it? Let me get off of this. Pull yours back up. Your entry at 48 meant that you had almost 3 points of profit when you reach that first trouble spot, which means you lock in on a 5 lot. Let's say you take 3 off, right? That's a $450 trade in a break-even scenario. And then when the second divergence prints, you're out break-even or better. It was a good trade. That termination that creates the full reversal helps a lot, right? That momentum helps a lot. Those strong triggers help a lot. And that perfect entry helps a lot. You just have to work into that second area, that management side. On a 5 lot, I probably would have taken 3 or 4 off at that trouble spot. Second divergence pulls me out, and I'm sitting on my hands. Great trade, Jose. It really is. Just like some other people in the room. Your entries are spot on. They're rules-based. They're beautiful. And now we're going to learn how to make some money with those great entries. That's the second piece of the puzzle. So now what we have to do is every time, and I like this, 3 divergences told you to exit. You couldn't tell that the pivot stop out was forming. So the potential was there. I want to address that. This negative number will flash when there's divergence potential, which at least lets you brace for it a little bit. Great trade. Just a little management opportunity. Let's find the next one. Guys, I love it. You're keeping me busy. Tam, posting pictures. Oh, no way. Day 1, Tam? And that's kind of small. Let me see if I can blow it up a little bit. In KM, this is case in point. And guys, I want you to see this. Oh, Jose, thank you. Anytime I have an opportunity to teach, it's great. And you're a great student. And Jose, can I ask you, has the learning process become infinitely easier now that you're posting charts in the room and asking questions? It's easier than doing it on your own, isn't it? Good. That makes me happy. I'm rooting for every one of you guys. When you give me the opportunity to teach, I'll break my neck doing it for you. If I missed it, I'll try and find it here. Tam, are you with me in here? Oh, I hope Tam didn't log out. Guys, this is day number 1. Momentum, everything says up. Tam takes the perfect entry. Actually, I think that's a picture of Sophia's trade. I got so excited for Tam for a second. Jose, there was one. Is that the one we just reviewed? Okay, that's the one that we just reviewed. Let me find your other one. If you know what time it was, feel free to help. Or if you can repost it. Here we go. I got you. Sorry, I went over that. 50-50, right? So now here's that same lesson coming back. 50-50 trade, right? I got it. I got him now. So the exact same lesson, isn't it? 50-50. Not no termination condition. So now we know to focus on the fibs in the moment. Perfect. We've already covered that one. One divergence prints. Beautiful entries once again. And you take quick profits. Nothing wrong with that. And then if we go back into that management opportunity, right? 36 becomes your trouble spot for the first one. Great trade, Jose. Beautiful execution. And then here's that same one from later on NinjaTrader 7. So Jose, do you see how at this point, you take a portion off at the trouble spot, you're break even at this point. There's no reason to have any risk on this trade at all. It's already done what it said it's going to do. It got to the first trouble spot. And if you're in at 32.75 and you're out at 35.75, that's 150 per, right? Beautiful. And now momentum says we're going to that next fib. So at this point, do you see how taking profits a little bit in the beginning, it helps you when that path isn't clear yet? And then at this point, if this divergence prints, the negative number says there's potential. Maybe it's an exit condition, but it never gave you that exit condition. It went to the next target. Great job. But that is your trouble spot. That's your first spot. This is where risk has to go away, because those divergence highs on a 50-50 trade can cause problems. Does that make sense? Such a nice trade. Great entries make trades manageable, don't they? Solid work, guys. You know, you guys are keeping me so busy, I really haven't even watched the live market today. If there's something going on, take a picture, post it. You know that I'll look at it. Then Tam, that was a picture of Sophia's trade. Gary coming in. Gary says, a lot of overrun there. Both of my Jose's. See that reversal bar from beyond the outer bands, right at resistance? This might be a little overrun. It may be just a little bit overrun here. Weak triggers just beyond the fib, and everything starts to change. You're going to keep an eye on that mid band because of the gap theory. Nice picture. And I love this. Everything says up, right? Go cat, go. Everything says up, the path is clear, and Gary says, man, wild horses couldn't keep me out of this trade. I love it. Nothing but advantages. Joel, trading with weak triggers, right? And it's a 50-50 with weak triggers. And your entry's in the middle of space, and you had divergence on a 50-50. So Joel, you forfeited not only momentum on your large chart, but you also forfeited momentum on your small chart and that clear path. That's a tough one. I love seeing the ugly, Safia. Gary, 50-50, no divergence, perfect entry. Just wanted to go higher, it looks like. You're still in that window of opportunity, though. I give these a little marination room. Still inside those large triggers. Safia, everything says up and you take the perfect entry, right? And then it pulls back and you enter again and you get paid. And it doesn't make your targets. Do you have divergence turned on your smaller charts? It's weird that there's not one divergence in this area. That's crazy. I love your first entry. It's beautiful. So let's talk about it, right? If trading like a Novak, yeah, sometimes we do crazy shit. This really isn't crazy though. So let's talk about it. Because there's always a lot of great information, right? Let's start with this. What's the 13-2 say? Or what's the large chart say? That's the best case scenario, isn't it? Beautiful. Best case, no, that's not 50-50. That's clear path. Safia, that's everything you could ever hope is going to happen on a large chart. But you're not running, well, you are running synthetics, okay. And you have strong triggers. And your window of opportunity is absolutely beautiful and you nail it, right? So what happens after the perfect entry? Let's talk about it. The smalls weaken, so we know that we're losing momentum, right? They're still inside. You're kind of like, all right, we're good. And then we get a trend change and the smalls continue to trend down. All right, that's cool. They roll, you look for your opportunity. And right about here, where it can't clear those large triggers, is probably where I give it up. I don't have a problem with anything you did there. I don't know why you would let yourself get stopped out so tight. So this is where management, right? So Safia, tell me, why did you get stopped out here when nothing changed? And if you felt that it had gone wrong, why on earth would you re-enter? And then if you were so convicted on re-entering, why would you put your stop 4 ticks below it? So Safia, there's a lot of coffees out there that are decaffeinated that are wonderful. They taste great. And I reckon, guys, this isn't unique to Safia. Ron, this is not unique to anybody in this room, guys. This is our best look ever. I love this. I love this look. It's a great look. But you have to remember that sometimes trades don't work, right? So the first one is perfect. And then when the first one doesn't work, right, you're going to reevaluate. You're going to be like, wait a minute. It's pretty good, but it's not great. But Safia, if you're so unsure that you're willing to put 2 or 3 ticks risk on a NASDAQ trade, you know it's the wrong trade. Or your stop would have been down here where it belonged, right? Does that make sense? This is, even though you're in the moment brain, says, go, 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 you're going to miss it. That little rational part of you is going, Safia, come on. Let's not take a big loser. We're getting crazy here. So I like the first trade. And honestly, Safia, I like the second entry when things roll. And I think once it doesn't clear that, I think that's when you start questioning. You can see that change on a small chart, even without the divergence. And they're shuffling on that fib. So nice trade, great read. You got a little excited. It happens. I do it too sometimes. John and I joke. We're like the Novak curse is the re-entry. Because I'm convinced that I'm the smartest guy in the room. Dag nabbit, and I'm not, ever. And sometimes I form that opinion, or I just say, man, I'm going to ignore some stuff, and I'll take a second entry, and it doesn't usually work. And that's where, for me, Safia, letting the triggers do what they want to do on NASDAQ, right, instead of fighting them, and waiting for that next entry when they roll, it might eliminate this one out of the mix. So that's good. S-Fits, you have a personal rule that once you hit 2 losses in a day, you find yourself trying to chase success. So personally, you stop trading, live to trade another day. I'm going to give you a 2-part answer. So S-Fits, let's say that I've taken 4 trades today, okay? And I've won 75% of them, which means that I'm probably up about $700 on the trade. What's your daily goal per contract, right? So if my daily goal per contract is $250 per contract, super simple. Well, then I'm $250 over my contract. I'll probably keep trading. The key is, am I following my rules? That's the biggest thing for me. Am I following my rules? When I write out a plan and I have a plan and I follow my rules, it creates a statistical advantage. I go into my day, I have a $400 stop loss. That's it. Or actually, I have like $300 per contract. It depends on the market. But if I'm trading well, and let's say I'm up $1,000, and I'm having a good day, I'm up $1,200, whatever, and I take 2 losses that fit the rules perfectly and I'm still above my goal for the day, I'll probably keep trading because I'm trading a plan. Everything that I do looks the same. Every trade that I take, or I'll say 90% of the trades I take, because I make mistakes like the rest of the world. But 90% of what I do has a statistical advantage. So if I'm still up, if I haven't hit my stop loss and the rules are met 100%, I'm taking the trade. You're not upset on that, you're upset on the process. Safia, your large chart gave you every advantage. So S-Fits, you'll figure out what works for you. Some people say, if I lose $250 per contract, I'm out. That's it, no more. Some people will say, if I'm over my goal, I'll trade until I take a loss. And then some people, if you know that your personality is that if you take 2 in a row, you start trying to make something happen, then I think that that's a great rule to give yourself, especially if you're breaking rules to create the losers. Does that help a little bit? Ultimately, you have to do what's best for you. When I started teaching this class, I would watch you guys take winners all day long. I would watch the market set up and create these beautiful scenarios. And I wasn't getting paid on any of it. And I would come back into the market at the end of the day and I would try to make up for it. And that was my personality, and it worked against me very much. That's beautiful, Safia. That is a 50-50 with no divergence, perfect entry. Guys, that's everybody. We all think that we're impervious to emotion. We all think that we're impervious to hope, to fear, to opinions. But the reality is that in the beginning, until that confidence is super solid, you're subject to being human. Yeah. So yeah, that's 50-50, right? Perfect entry on a 50-50. And it's tough to figure out what your trouble spot is because there doesn't appear to be one. It's a nice trade. So S fits, you're human. Gary, you're human. There's a 50-50, perfect. Jose, one of my favorite things in the world is to see somebody take the perfect trade and it doesn't work, and then to have the confidence to take the same trade, same rules, same look, and get paid on it. Nice job, Jose. Great trade. 50-50, no divergence, strong triggers, perfect entry, stop where it shouldn't, and getting paid. Rockstar. Joel, nice recovery. I think this one was a mistake, right? Kept your head in the game, let the rules fit, perfect entry, boom, boom, money all the way down. Great trade. If you're brand new in this room, I want you to know you can do exactly what you're watching these guys do. Yeah, S fits for sure. Guys, I'll have a week where I'm 90% winners, where I am so focused on my plan that I'm absolutely crushing it. And I'll wake up Monday morning full of piss and vinegar and have a couple opinions and hit my stop loss in my first two trades and have to shut it down and go, son of a gun, I broke my rules twice. But I'm telling you guys right now, if you keep it simple, if you keep it focused, if you wait for advantages, it saves you from yourself a lot. If you write it down on a piece of paper, my only options are rules met, rules not met. It's going to help a lot. It's going to take that emotion, that fear, and then you just have to develop the trust in the rules to get to the point to where you do them. KM, you have a dream. You're dreaming of $1 million home, which will amount to a mortgage of about $6,000 a month. KM, I was an English lit major. I'm the guy that you don't want to ask for math help. But let me give you the answer. You ready? Without one number. With no plan, with no statistical advantage, with no process in place, it doesn't matter what your end goal is. Stop asking how much money do I need to make and start asking how do I make the money? Does that make sense? Stop asking how do I afford a Ferrari and start asking what do I need to do to create the wealth to afford a Ferrari? Hey, where's the finish line of the marathon? Who gives a shit? Pardon my French. You have to run 26.2 miles to get there. Guys, when you start focusing on the end game and you forget about the process, amen. Focus on the process. You want to make $6,000 a month. So here you go. KM, make $300 a day. That's $1,500 a week. That's $6,000 a month. How's that? You need one crappy high probability trend trade a day to make your goal. And if you focus on that process and you win that one $300 trade a day, do you know what that $6,000 month becomes on a 10 lot? You get to park a boat out behind your lake house. But guys, if you're focusing on the money and you're not worrying about how to get there, you're just spinning your wheels. If I walk onto the golf course and I say, I want to shoot a 64 today, and I don't work on my swing, I'm not doing it. Jose, you're thinking that the trend trades come too far and few, right? And you're like, man, I can't take this trade. It never happens. How am I going to make money? And you chase. We all do it. And now you're only taking trend trades, and now you're getting really good. Isn't that pretty cool? And you're very welcome. I won't let you fail, guys. All you have to do is ask for help. I'll never quit on you. I love teaching. I hope you can tell by the classroom. I love teaching. I am absolutely passionate about helping people get better, find a better place. So Jose, here's a great one. Make $3 million and buy it with cash. There you go. How are you going to make $3 million? All right, Mr. Solar, are you ready? Smalls are below, larger above. Guys, does everyone see it? 50-50 trade? Let's annotate a chart together. Give me a Y in the room if you're with me. This is a 50-50 trade. 50% of my triggers have broken through. 50% have not, and I have odds favorable momentum. Everybody's good with that, right? Man, that's a good look. This area has the potential to break, but it hasn't yet broken. So let's look at our smaller, faster chart. I don't have divergence. That's a plus. You know what? Let's do this. Call me crazy. Let's put a checklist on it. Do we have odds favorable momentum on the 13-2? Guys, this is how easy it can be. Yes. Smalls outside of the large on the small chart. Yep. No divergence. Yep. From a good top, that was a termination that created a full reversal. Look at this, guys. My checklist told me that I need to enter at the area. My window of opportunity are those lines right there. Those are the only ones inside. My stop is going to go outside of those large triggers. Keeps me safe, doesn't it? So here's my entry. My entry is at 72.75. The market continues down. $200 worth of profit. Guys, if you're doing that mechanical approach, this is a $300 trade on a 2-lot. So Jose, here's the next half of it. Are you ready? Let's get all this off of here. If I'm taking a medium probability trade, if I'm following that best of the best plan, my management plan says if divergence prints, exit the trade, right? Which means that right here, I exit the trade, which means right here at 65, I exit the trade. So even if I didn't take the $300, guys, I'm still out of this for $100 per contract. The divergence on the 50-50 changes the scenario, and look what happens. I'm giving you guys every tool you could ever hope for to be successful with this software. We just have to work together until recognition becomes easy. That's it, 50-50, right? So let's take a pre-trade picture, Jose. And let's put the checklist on it. Guys, do you know why people don't use the checklist all the time? It's because it keeps you out of trades. And that pisses people off. Do I have odds favorable momentum on the 13-2? Guys, what do you think? Yes or no? Help me with this one. Don't make me do it myself. I know the answers. Absolutely. Are the smalls outside of the large on the 5-1? Yes. No divergence on the 5-1. Too soon to tell. Divergence potential is there. But there's no divergence yet. All right? Is it a good bottom on the 13-2? Is it a termination condition that creates a full reversal? Guys, it's not. That's a no. This will keep some of you out of the trade, but some of you say, with all of these advantages and one disadvantage, I'm still willing to take the trade. And what does that mean? That's your area inside of favorable large triggers, guys. In the moment, that's where this trade needs to originate, all the way down here, below that resistance that hasn't broken. That's a pre-trade picture. But now it's already reached resistance. So Jose, we don't worry about the 50-50 anymore. There's that termination condition that you were talking about, right? So I can't look for the 50-50 anymore because I've reached an area and none of the trigger lines have broken. And guys, if you go through this process every day, if you go through this every trade, you talk about what you see. I'm going to go to the next market and I'm going to do exactly what I do when I open a chart. I look at the chart and I say, okay, I'm in a downtrend. I should only be looking for shorts. But my small triggers are below my large triggers. I don't have odds favorable momentum. I'm done looking for a trade. How easy was that? I don't have a statistical advantage. I open my chart. I'm in an uptrend. Yes. I have odds favorable momentum. Absolutely. I just traded into resistance and absolutely none of my trigger lines have broken through. I don't have a trade. That's it, guys. I got two options. It either is or it isn't. It does or it doesn't. It do what it be, right? I want you to embrace this simplicity. I want you to realize that Nexgen has spent the last 25 years teaching the same thing. The last 25 years. Identify your termination condition. If it holds, your triggers roll. And if it does, guys, I'll teach you the HVA trade. I'll teach you how to take that first shot. But if that's not your trade yet, everything is strong on every chart. Pull back to resistance. Take that trend trade every time it sets up until you reach the next termination. S-Fit's awesome. Everybody clicks at a different time, guys. Some people click on day one. Some people click on day 1001. And there's going to be a million clicks in between. It's like a whale song. But guys, this is it. This is what Nexgen has been teaching for 25 years. How many software companies are still around 25 years later? How many software companies have the CEO, the creator of the software that jump into the room and talk to you guys about different looks? How many have live education, giving you feedback every day, right? Guys, we're the best. I sound a little cocky when I say that, but I've researched. If resistance holds, we're going to look. Right up until we get to support. And if support holds, we're going to look. And we're going to repeat this process every day. And we're going to let it be simple. Taking pictures with the spreadsheet. Man, I want to go long. KM, the best time to trade is when the rules are met. I'm glad you did too, Jose. And I'm glad that you didn't give up when it got frustrating. I'm glad you embraced the path. KM, between 9 and 11 a.m., it's outstanding. The market's open in Chicago. It's wonderful. The movement is great. There's also great movement after 11 a.m. And there's great movement long before 9 a.m. So when the rules are met is the best time to trade. Pick the one that fits your schedule, right? I'm teaching you guys between 9 and noon. So I don't get to trade during these times. But I can tell you I'm $120 short of my goal for the day from the trade that happened pre-market. Embrace it if you want to wake up at 3:30. I try not to. All right, but I'm going to say it again, guys. My last 20, 30 minutes is my broken record phase. Learn how to identify the trend. Once you learn how to identify the trend, make sure that you have strong triggers. Once you have strong triggers, make sure the path is clear. And when the path is clear, let's look for an entry, right? This is it. This is it. What a great path. What an easy path. Don't complicate it. Where's my engineers in here? Don't complicate it. Don't make a spreadsheet. Nice, Gary. Check it out, guys. Termination condition. Gary, this is the best picture ever. I'm going to go to the live market. I want you guys to see what happened here. And I don't know what's happening now, but in the moment, I want you guys to see this. Odds favorable, clear path. I want you guys to recognize this because this is okay and this is going to happen sometimes. There's an area inside of favorable large triggers. That's the wrong one. What did it look like over here the first time? Guys, when you had odds favorable and you had a clear path, it pulled back to support inside of favorable large triggers. And it went from 48 to 56, 8 points, $160 worth of profit. And then a lower divergence with weak triggers killed the trade, right? Get in, manage, make some money, you're cool. But then we have a pivot stop out with weak triggers, no more long trades. And that pivot stop out with weak triggers pushes you back to support and no trigger lines break, no short trades. Guys, you're watching a market consolidate and you're using Fibonacci and termination conditions to do it. Loss of momentum to support, no short trades, pivot stop out, no long trades, support, no short trades, pivot stop out at resistance, no triggers, no long trades. This frustrates new users. Mark, I can't make money when the market does this, and you're absolutely right. But when the market does this, you get paid, right? And when the market does this, you get paid. And when the market does this, you get paid. Where else, guys? The market's been crazy today. It's been awesome. When the market does this, you get paid. And there's going to be times where the market's going to ask you to stay patient. It's going to tell you, hey, KM, you don't have the advantages. S fits. The advantages aren't present. Sit on your hand. Go play with the dog. Safia, I don't have a clear path. Your rules aren't met. Alan, you've gotten quiet lately, but I see you smiling in this room. The path isn't clear, right? And it's okay. Just saying, there's nothing to do. Being okay at doing nothing when there's nothing to do is the biggest advantage you'll ever give yourself, guys. Ever. What's this going to do? Is it going to break or is it going to roll? I don't know. Is it going to go up or is it going to go down? Hell, I don't know. I'm not in control, guys. You're just eating or seating. This guy, the shark, he moves the market. The shark creates momentum. The shark reacts to areas. The shark is the big money investor, the institutional traders. Norbert. Next-gen users. This is you. You're the remora. You're that guy that hangs out with the guy that makes things happen. And when he says, here's your momentum and here's your clear path, this guy right here is going to push just hard enough to give you the perfect entry so that you can take advantage of all of his hard work. That's your plan. Keep it simple. Keep it focused. Guys, you can do a million things with this software, but you have to learn how to read it first. That's what the high probability trend trade does for you. And you're sick of me saying it, but I'm going to say it again. To minimize your learning curve, post pictures in class. Every picture, win, lose, or draw. Good, bad, and the ugly, right? If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? To be sure, you need feedback from us, guys. You need feedback from me. I love my job. 15 hours every week, I'm here to give you feedback on everything that you see, everything that you do, and everything that you wonder. If you place a trade on the simulator, right? Monopoly money. You participate in class. You can't lose money because there's no money at risk, especially if you're on demo. NinjaTrader was provided to you for free. You got a 100% working copy of the software, guys, for free. The class is for free. The feedback is for free. You need someone to tell you what you did right or wrong when you're new. This is part of the educational magic. It really is, guys. And you're going to realize things about yourself. One thing you're going to realize is how you talk to yourself. I'm no good at this. I'm stupid. I don't get it. I screwed up. Guys, don't talk to yourself the way you wouldn't let me talk to you. If I called you a dumbass, you'd call my boss and you'd complain, right? So don't you call yourself one. Don't you tell yourself that you're stupid, guys. You're brand new. Be new. It's okay to be new. Embrace being new. And you're going to recognize maturity. And the first thing, guys, recognizing you're maturing as a trader is managing your risk and then managing reward. Your stop placement, your window of opportunity is how you're going to manage your risk. Your rules that provide statistical advantages are how you're going to manage your risk. Your great entries are how you're going to manage your risk. I've given you everything you need to manage your risk. And then, next piece of the puzzle, you're going to manage your rewards. You're completely relaxed when making trades. My palms used to sweat. I used to lean in on the monitor. I would adjust my charts 1,000 times during a trade when I first started out because I wasn't relaxed at all. I was anxious and scared. Now, guys, I'll take a trade. I'll go toast a waffle, go to the bathroom, whatever. Doesn't matter. The trade's the trade. And if it follows the rules, I'm in it. You don't force or chase trades, guys. You don't work off of hope. If you miss a trade, it's cool. You missed the trade. It's not your money anymore. And guys, don't let trading be your daily adrenaline fix. Your trust in the rules is going to remove that adrenaline from the equation. You follow your plan. Your only options are rules met, rules not met. And then, guys, this is kind of compounding on what I just said. Your worth as a trader and your worth as a person have got to be two different things. Allow yourself to make mistakes. Allow yourself to be new. Allow yourself to screw things up a little bit. You don't see one of the fibs. You want to make sure the picks are matching. On the 13.2, you have 13.2 fibs, 21.3, 5.1 synthetics. You don't show the 44. I don't have a 44.51 fib. Nope, we look a little different. You've also got divergence. So, Jose, let's go through the thing. You ready? Are you 10 days back? Right click and look at your data series. Are you 10 days back on the 13.2? Well, there you go. Our software is trying to calculate on two very different scenarios. That's why we look different. Aha! KM, it depends on the market that you're trading as to what the margin requirements are. Here is a PDF file with what they charge at NinjaTrader. That'll give you an idea of what's going on. And if it's affordable, you want to take more lots and make more money. And KM, you're still fighting me. Absolutely. Take more lots. But learn some rules first. Guys, I've been doing this for quite a while now, and I've met a lot of people. And the people that talk about the money are the people that don't make it. The people that talk about the process wake up one day and say, holy shit, I'm making money. That's like my third bad word today. I apologize. So KM, learn the process, and absolutely, because if you take the perfect trade on a 2-lot, money is the goal. Absolutely. Waking up every morning is my goal, KM, but if I don't focus on going to sleep at some point, I'm never going to reach it. So a $300 winner on the perfect trade is a $3,000 winner on a 10-lot, right? It's a $30,000 winner on a 100-lot, but the trade never changes. The trade never changes. So absolutely, you're absolutely right. If you can afford to trade more lots, trade more lots. On everything but NASDAQ I do, J Solar, 10 days across the board, and then on NASDAQ I do 5 because there's so much stick data. Does that make sense, KM? Absolutely, more lots create quicker goals. And the cool thing is, let me show you something that's awesome. If you do something like Apex trading, guys, right? If you do something like Apex trading, you can control $50,000 for, right now I think their sale is $34 a month. $50,000. But they'll allow you to trade up to 20 accounts. You can leak 20 accounts, which KM, that means that on one account, you can take one high probability trend trade for $300. And that $300 on 20 accounts is $6,000. From one trade on one market on one account, you can multiply it. And you can control $1 million worth of their money, 20 accounts, for about $600 a month, rather than the $75,000 that's going to cost you in margins to do it, right? Guys, there's no reason to blow out accounts anymore. There's no reason to overfund. Do something like a prop firm. So if you go to Apex, KM, I'll show you exactly. Apex Trader Funding. This is how you test your plan. This is how you test when you're winning or losing, guys. You're like, I'm on simulator. I'm winning more than I lose. I'm following my rules. It's good. 50 grand. It costs you $167 a month, but on their sale, it costs $34, $35. And here's what you have to do, is you have to reach your profit goal before you lose it all. It teaches you to manage your money. It teaches you to manage your profits. It teaches you to take profits when it's appropriate, right? Joel, me too. When I follow the rules, I win, well, 80% of the time. So KM, it's a process. Let me go through. You guys may have missed it the first time I said it. It's a process. So here's what you need to do. You guys ready? I'm going to give you everything you need. You need to post trades in class, which means that you have to be on simulator, right? SFITs, they want you to win. They want you to win. Because if you make $1 million a year, they make 100,000 of it. Isn't that awesome? If you make $1 million a year, they make 100,000 from you being awesome. And I can tell you that Apex loves Nexgen traders. Because there's a lot. Why wouldn't you? OPM, right? That's the best money to trade with. Other people's money. But embrace the process. Guys, everything you do, post it in class. Use that spreadsheet. But you have to learn the rules. Give yourself an advantage. You're going to grow with the software. You're going to do trades later on that you're not doing now. Simulate. Get them in the room. Make sure you're following those rules, guys. Make sure that you're comfortable with it. And just because you're comfortable with it on a Tuesday doesn't mean that you're going to follow the plan on a Wednesday, right? You're building trust through repetition. You're getting better every day. Use market replay. Repeat the process until you're always taking the correct trades. And then SFITs, KM, that's when you go to live money. But it doesn't have to be live money anymore. That's where you go to Apex and test your plan. Test your plan. And what most traders are going to find, and you guys don't want to hear this, you're going to have to accept that you're less capable of being a trader than you initially believed your first time out. We all feel entitled to win. I felt entitled to win. But only the people that trade well do, guys. Test your trading plan using that prop firm, right? Control a little bit of money for a little bit of money. And then if you pass, trade their money. And then when you make money with their money, add your own to the mix. But embrace the path. And guys, that's it for me. Great class today. Great job, you guys that jumped in for the first time and participated. I'm telling you right now, pretend like nobody else exists. And what you're going to find, because Joel, you haven't lost enough to be crazy adverse. Termination all day. Joel, because you're human, because you form opinions, because you have hope and you have wants, that's all it is. The same reason everybody breaks rules. Because we're human and it's a pain in the butt to be human and still be a trader. But I'm telling you, it can be done, guys. You can beat the system. You just have to study, put the time in, and don't be in a hurry. Everybody gets to the finish line at their own pace. Don't compare yourself to anybody. Don't try to trade like anybody. Safia, have a wonderful weekend. Guys, the rest of you, have an amazing weekend.